the garden centers.
Good morning and welcome back to Squawk Box Live from the NASDAQ market site in Times Square. Checking the futures are up again. Well, the previous couple of days they were down at this point in the session, but both times turned around and closed higher. Market kind of like a beach ball. And look at the S&P, another 10 points added, gets it up to somewhere under 3%. Below the all-time highs. Not quite 3%, needs less than 3% to get back there. So we had a bit of a, hopefully we wrung out some of the, the enthusiasm in the market, and it wasn't, we're back to 21 times earnings, but we had 20% gains the previous 2 years, and we're right on those gains at this point. So people, they need to read, we just heard Chandler talking about how poorly American investors have done. I don't know what his horses in the race.
Well, I think this year,
talking about the dollar.
He's a dollar.
Talking about the dollar.
Right.
I'm talking about the dollar, but
and looking to diversify because of the gains that you've seen with the weaker
because of the dollar.
Overseas.
I know, but in terms of would I all of a sudden heavily favor Europe versus what's going to happen in the United States? No.
No, but I had not thought through the idea that the DAX's gains of 18% or 30%.
You add it on
U.S. investor
with the dollar.
Right. So those are some pretty big numbers to try and compete against.
Right, but there's still a lot of hand-wringing about us. You see, have you noticed any political ads living in New Jersey?
Oh, yeah, they're all over the place.
Every one of them where it's on the Democrat side, I think, is the horrific stock market that we keep hearing about, the horrific stock market.
That was last month, or 2 months ago, April.
And we just ran a story about how
strong.
we've killed all the millionaires in the 401ks because of the stock market. It's down 2%.
Right, but that was based on last quarter's numbers, which ended in April.
We're still running it.
Before you saw the May.
I know, still running.
But this is like the problem with all the data that we're seeing right now. It's backward looking, and we know we're at an inflection point. There's a lot of moving pieces that are taking place, which is why the data that comes this week is going to be so important.
Well, there'll be a big CNBC.com piece on how we've killed all the millionaires. That's coming a little bit later today.
As of April's numbers.
Yeah.
Anyway, 5 things to know ahead of today's opening bell. President Trump posting about trade early this morning on Truth Social. He said he likes China's President Xi, but he is very tough and extremely hard to make a deal with. The White House sent Congress a $9.4 billion recessions package today that would codify some of the spending cuts that were made by the Doge team. The administration is essentially asking lawmakers to reverse spending that they previously approved for foreign aid and publicly funded media, including NPR and PBS.
$9 billion.
$9 billion.
$9 billion. It's going to be like pulling teeth without Novocaine.
For $9 billion.
For $9 billion. Not $2 trillion. Not $1 trillion. I mean, this is very frustrating.
How Congress works.
And very
You
hard.
understand why Elon gets really ticked off with it.
I'm ticked off too. I don't want my salt. I'm willing to give up things that would have benefited. Apparently he's not.
No.
Apparently he's not.
Agree with you. I would
If
give up salt.
what he
I
said
would
over
give
the
up-
weekend, I agreed with totally. But when he says it's an abomination, and I want my solar and EV credits, that's where it's like, wow, all along, is this all you cared
If
about?
he's willing to give up the solar and EV credits.
Then it's fine.
Okay.
I want this to be deficit neutral, but not like you. I don't want to raise a bunch of taxes. I want spending cuts.
Well, I don't want additional giveaways.
You've always loved Simpson Bowles.
I have loved Simpson Bowles, and by the way, I don't like the populist trend with this.
Right.
I don't like taking more and more people and saying you don't have to pay taxes on overtime or tips. I think that's bothered me from the very beginning when you said it on the campaign trail.
I hope that raising corporate taxes and that raising the top rate, but if they raised the top rate and they did carve-outs for small businesses, I could almost go along
Well,
with
that's very Simpson Bowles of you. You've got the idea that you need to raise revenue in places, you need to cut spending, and that's the only way.
For couples that make $5 million more, you could go to 40%. As long as you could, but not if you don't carve out the small businesses.
Okay. Well, everybody's got.
Is that what you want to do?
I'd be okay with that. Mm-hmm. Everybody's got their things that they're with, but I do think that everybody's going to have to feel some shared pain for this, and I think that's the only way to make it work if you're truly concerned about the deficit. To get back to these 5 points for today, the governor of the Bank of Japan said uncertainty over U.S. trade policy and President Trump's tariffs could hurt Japan's exports prod firms to delay capital spending plans and discourage them from raising wages. But he signaled confidence in the ability of Japan's economy to withstand downward pressure like that. And the CEO of Nissan Motors speaking to our colleagues at Squawk Box Europe's earlier this morning. Ivan Espinoza took over as CEO in April. He said that the company's short-term focus is to fix the company as it contends with declining sales, the transition to EVs and competition from Chinese rivals, as well as the threat of tariffs. And Warner Brothers shareholders voted to reject a $51.9 million pay package for CEO David Zaslav. That vote is non-binding, but the board says that it takes it seriously and will continue to engage with shareholders. When we come back, it appears that the honeymoon between Elon Musk and President Trump may be over. Musk
Lawyer hammering that in.
Signature tax and spending bill. Dan Clifton from Strategas will join us on this story after the break. Squawk Box will be right back.
A lot of nuance. A lot of nuance. One of our top stories this morning, Elon Musk calling out Congress for voting to pass the president that tax and spending bill. On X, he wrote, "I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination." Joining us now, Strategas Head of Policy Research, Dan Clifton. Dan, it's good to see you. In the same breath, he whines, "There's no change to tax incentives for oil and gas, just EV solar. Slashing solar energy credits is unjust." If he had just stopped at the abomination part, it would have been so much better and so much cleaner and so much more genuine. And I agree with everything. I don't know if we need the tax on tips. I don't know if we need the salt cap. I'd like to cut a lot more spending. But for him to say it and then say, but don't cut my pork, it to me just reeks of self-interest.
Well, I would agree with you, Joe. Good morning. And this is a very important tax bill that's coming through. If Congress doesn't pass this tax bill, you're going to have a $400 billion tax increase on middle-class families on January 1st. So getting this bill done is important, and he's throwing in roadblocks, really going for the kill shot here in the Senate and trying to derail it. And I think what's interesting about what you're saying is that this morning the fiscal hawks who demanded those renewable energy changes are holding up Musk's argument, saying we need more spending cuts, not realizing that Musk is really just trying to push for changes to the renewable energy provisions. I don't want to say that people's intentions aren't good, our deficit is a problem, but when you look at what we're doing in totality here, we're taking tax cuts that were already in place, we're extending them. We have about $1.5 trillion of offsets, and the president just put in place $2 trillion over 10 years of tariffs. I actually think we're moving into net austerity here. It's not moving the deficit down quick enough. But clearly, if we're unhappy with these smaller changes, it's going to get a lot more painful as we got to deal with these larger deficit issues in the future years.
Yeah, it almost looks like he is trying to scuttle the bill itself, which, as you say, you do. If you did totally scuttle it, it's you said 400 billion. It's $4.5 trillion over 10 years for tax hikes, and there is 1.5 trillion in spending cuts. You know, Reagan said, the good versus the perfect, and if I can get 80%, I even admit this is nowhere near 80% of what Republicans want, but maybe it's 55%. To scuttle the whole thing is not good, and it wasn't even gone a week.
Well, I don't think he'll be successful in this. I don't think failure is an option here for the Republicans. But when I take a look at it, I mean, the reforms that they do to the student lending program in this bill by getting rid of all these junk programs with high default rates and being able to get in serious reforms to finally start to slow the growth down of some of these Medicaid after 20 plus year spending increases annually. It is not a perfect bill in any sense, but there's no surprises here. The president campaigned on no tax on tips. That's not my preferred way of doing this, but he got 75 million votes. The rest of us got 0. So the president's going to do what he wants to do. He's going to extend the tax cuts. And where the short-term deficit increase comes from is by providing incentives to increase onshoring here in the United States. We're going to have a factory building boom here, Joe, because this bill allows for factories to be fully expensed right at the beginning. It's like shoot anything that flies, claim anything that falls. There is a bit of seriousness of thought that's gone into this bill, and I just think that there's a larger story here, and we fully haven't uncovered the breakup between Trump and Musk at its fullest lengths here.
Hey, Dan, I don't think that that Musk is going to get his EV tax credits reinstated or the solar tax credits reinstated, but he is giving some heft to the budget hawks, the deficit hawks at this point, and I think there will probably be some changes that have to be made in the bill as a result. Does that mean SALT goes away? Does that mean some of the other stuff around the edges goes away? Does it mean that there is a higher tax rate on the wealthiest Americans that goes through as a result? Because that's something that President Trump liked before. He couldn't get that passed. If there's something that has to change, where does that happen?
Yeah, the bill is going to change somewhat in the Senate, and I would expect some of the renewable energy provisions in the House, which were pretty tough, are going to get loosened up a bit. Musk is very focused on the
Your answer is they're going to spend more when he complains about the deficit?
I'm just giving you kind of where you got to increase spending on one side, but they will cut the $40,000 SALT. It will probably end up closer to $30,000, not the $40,000 that went into the House. They're probably going to get rid of the remittance tax. That's something that is in the bill. They're probably going to have to change a portion of Section 899. So these changes are going to be all on the margin, Becky. I don't expect a larger spending reduction on net. I don't expect a larger spending increase on net, but it is going to be on the margins, and you got to find 51 votes in the Senate. You got to figure out how you're going to get there, and it's going to require some tweaks and adjustments. And then you got to go back to the House, which has a very fragile equilibrium with just a 3-seat majority. So the
Right.
changes here aren't going to be widespread. We're just throwing new roadblocks in with these arguments, and it's making it tougher to get the bill through before July 4th.
We got Senator Ron Johnson on. I wish we could, have Senator Susan Collins on at the same time, because those are the two.
Yep.
Those are the two polls in the Senate, and I don't know what gets a yes from both. I don't know how you get there.
Yeah, again, I think what you have to do here is say, does everybody want the tax cuts extended? The answer is yes.
Right.
Then you got to say, okay, what do we got to do to make that bill palatable for both polls? And there's going to be one or two issues for everybody, and you just got to figure out where that is. What they did in the House was so much harder than what they're going to do in the Senate. I mean, the difference between Tom Kaine and Chip Roy, and they came together and they voted for a bill 2 weeks ago. So I do think that you will get a bill in the Senate. Joe, as you know, this is not linear. It's going to have its ups and downs. And I think the real surprise is if they can get this done by July 4th, begin to sterilize the impact of those tariffs, and get the uncertainty of whether these tax cuts are going to expire out of the way. I think it's positive for the U.S. economy overall.
Interesting. The numbers so far look positive, and suddenly the market's back. So well, maybe the worst case scenario never does play out, Dan. But we like a lot of hand wringing and pearl clutching on news shows.
It makes for good stories, but the
What
larger
are we
issue
gonna-
is
Yeah.
the larger issue is that we're going to have to get the deficit down at some point. If we're not getting it from growth, we got to do it through austerity, and this is showing us how difficult that process is going to be.
And you think there is some austerity with all the.
Yeah.
All right, Dan. Thanks. Coming up.
Great, thank you.
Oh, you're welcome. Basketball superstar Steph Curry working to make his off-court ventures as successful as his on-court. We're going to get a preview of CNBC's new Curry Inc. special after a break. Squawk Box will be right back.
NBA champion Steph Curry has dazzled fans on the basketball court, earning his place as the greatest three-point shooter of all time. But off the court, he's building an equally impressive legacy through his business venture, 30 Inc. CNBC got an exclusive look at the business behind Steph Curry.
He's a two-time MVP, a four-time NBA champion, and he's almost indisputably, both statistically and artistically, the greatest shooter of all time.
It's the artistry, it's the fact that he changed the idea of how the game should be played. When I first coached him, the first few months, he would take these shots and I would think, what is he doing? Like, this is insane. And then after a few months, I'm like, well, he's shooting 40% on 30-foot threes.
But Curry's aspirations in life go beyond basketball. For the past decade, he's been building a brand.
For Under Armour, we're the underdog brand.
And a business. In fact, many businesses.
We look at it as more of like a house of brands.
A media company. A bourbon brand. Cheers. A marketing agency. A golf league for kids. And a philanthropic foundation that gives back to students in Oakland.
To support the next generation of super talented kids.
And those are just the beginning of Curry's off-the-court aspirations.
I wanted to kind of create my own entity that I could build true value, and hopefully that's something that will be sustainable, when I'm done playing too.
Joining us now is CNBC sport and media reporter Alex Sherman. And Alex, I think no matter who you are, no matter who your team is in the NBA, it's hard not to love Steph Curry, even if you're not a Golden State fan, because what he has done, the hard work, picking up against doubters, and just the constant impressive numbers and stats that he puts out, and the person he is.
Yeah, that's part of the piece, really, Becky, is that you've got this guy that is, I think, beloved by fans, but also really beloved by marketers because he's so marketable. I mean, and the dollar signs are there to show it. He's this last year, I think Sportico ranked him as the second highest paid athlete of all athletes in the world. He's by far the highest paid NBA player, not just salary, which he has been on a year-to-year basis since 2017, but also if you add in all the sponsorships and so forth, it's well over $100 million per year at this point. But he also has this portfolio of businesses, partially of which he's put some of that money into it, but he's got Curry brand with Under Armour, and then you heard it a little bit in that sizzle reel for the full piece, which will air at 9 p.m. tonight, but he's got a bourbon brand, a media company, a marketing consultancy, these sports leagues for kids. He has a charitable foundation, and it's all housed within this thing called 30 Inc. And so there are three takeaways I hope people that will watch tonight to come away with. One is to learn a little bit about 30 Inc. Two is I ask him a lot of questions about what he wants to do after he retires from playing basketball, and he gives me some pretty candid, revealing answers there. And then three, I hope people take away a little bit where they learn something about the guy himself. And look, I tried to dig around to get some sort of dark side on Steph Curry because, like, I didn't want this to be some sort of, like, grand old puff piece about Steph Curry. So I asked a lot of people, like, give me something here. I came away with it being like the guy you see on camera is pretty much the guy you see off camera. Like, I do not think there's much of a dark side to this guy.
One of my favorite stories about him is how he came to Under Armour, how he left Nike and went to Under Armour.
That's in the piece.
That was complete. That's such a diss.
So one of the people that we spoke to was the CEO of Under Armour, Kevin Blake, and he rolls out the whole story about how from Under Armour's perspective there, because what you're referencing is sort of the Nike perspective of it, where there was this presentation that kind of went wrong, and Steph Curry was a little taken aback by it.
His name wrong. They had like
the wrong presentation, and they were marketing for several athletes. And he was already with Nike at that time, but he was low on the totem pole. So Under Armour was trying to get Steph Curry, and they actually used his teammate, like a little known teammate whose name was Kent Bazemore. And what Kevin Plank says in the piece, you'll hear it, is that they started showering him with gifts in the locker room so that, because he was right next to Curry, so that Curry would look over and be like, what is this company? Well, why are they giving him all of this stuff? They make him look this up. This is what I want, right? And it worked. That's the great part of it. The whole pitch worked, so that's part of the piece too.
Well, I can't wait to see it. I was out in in San Francisco when you were shooting the stuff on the yacht with him, which are very cool pictures on this. Very jealous of everything you pulled together on this, and I can't wait to see it tonight.
And there's some behind the scenes stuff that I will release tomorrow in my weekly newsletter for CNBC Sport about hanging out with him and some stuff that didn't make the piece. You can sign up for that at cnbc.com/sport.
Alex, thank you very much. Again, Alex Sherman. And by the way, you can catch Curry Inc. That is tonight at 9 p.m. Eastern and Pacific time for West Coast viewers right here on CNBC. Thank you.
Thank you.
Sport.
com.
7 a.m. on the East Coast, you're watching Squawk Box on CNBC. I'm Joe Kerner along with Becky Quick. Andrew is off today. Among today's top stories, U.S. and China trade tensions. President Trump posting earlier this morning on Truth Social that China's President Xi, in his words, and the President's words, is very tough and extremely hard to make a deal with. The White House has said repeatedly that the two leaders are expected to speak at some point this week. We'll see. The EU's trade chief says he had productive talks with U.S. Trade Rep Jamieson Greer. The White House is reportedly pushing for countries to give their best trade offers by today. And 50% tariffs on steel and aluminum imports are now in effect. Today's the day. It began at 12:01 this morning after President Trump signed an EO, an executive order yesterday. It doubled the metals tariffs from 25 to 50%.
Got the futures this morning. You'll see right now we are in the green. In fact, the Dow futures up by close to 100 points. Dow's been up the last 4 trading sessions in a row. S&P futures up by about 13. That comes after 2 days in a row of gains for both the S&P and the NASDAQ. NASDAQ futures this morning up by just over 40. Let's get over to Frank Holland. He's got a look at this morning's pre-market movers. And Frank, what's on the dashboard for you today?
Hey, good morning, Becky and Joe. We're going to start with an earnings mover. Take a look. CrowdStrike moving lower after swinging to a first quarter loss. You see shares doing about 7%, one of the worst performers in the S&P in the pre-market. The cybersecurity player getting weaker than expected revenue guidance for the current quarter. The company says the cost related to its software outage last summer, that just continues to weigh on results. Remember that last July? CrowdStrike also adding that revenue is still being hurt by the incentive program it launched last year to retain customers. This morning, a flurry of downgrades from B of A, Canaccord, Evercore. B of A says the valuation is elevated for a company they see as having slowing growth in the near term. Again, shares down just about 7%, big drop after earnings. You see it right there on the chart. All right, moving on. CrowdStrike CEO George Kurtz, he's going to sit down with Jim Cramer. That's coming up tonight on Mad Money at 6 p.m. Eastern. A lot of talk about the results and also some of that incentive program you'd imagine. All right, moving on. Another earnings mover. Hewlett-Packard Enterprise, see shares are higher right now. Shares up over 5.5%. The company beat revenue estimates, also beat EPS estimates. The server and cloud software company also raised its profit outlook for the year, driven by demand for AI products, even as it continues to navigate uncertainty surrounding the economy and surrounding trade. Right now, again, you see shares up just about 5.5%. In response to that uncertainty, the company actually lowered its revenue guidance, but again, raised its profit outlook. And moving on to Yum Brands. Yum Brands shares, you can see right here, they're moving higher, up just about 1% after an upgrade from Goldman. Goldman moving the company from neutral up to buy. New price target also 167. Analysts say the parent company of KFC and Taco Bell has best-in-class restaurant growth. They also praise the high franchise mix. They estimate just about 98% of units. Analysts did add they're a bit concerned about the international business being impacted by anti-U.S. sentiment. They flagged China in particular, where Yum generated right around 18% of sales in 2024. Shares of Yum up just over 1%. Back over to you.
All right, thanks, Frank. FinTech company Health Equity is up in the pre-market after beating analysts' expectations on the top and bottom lines. It's a custodian for health savings accounts, and the company has its finger on the pulse of healthcare in America. Joining us now, first on Squawk Box, Scott Cutler, CEO of Health Equity. It's his first TV interview since taking over the top job at the company on my birthday, and it's January 6th, right?
Absolutely.
Okay, I'll take it as a birthday present. Actually, shareholders are doing pretty well. Solid numbers that you reported this time. Stocks up, even in a market that maybe hasn't been, it's getting better, but it hasn't been that great. And what's in this new bill would be a boon for you.
We had a great start to the year, and I think it's just backed by growth in this industry. We're the leader in the space of health savings accounts, which is an industry that's grown from 10 billion to 135 billion over the last decade, and yet we have an affordability crisis for Americans in the United States. You know, 1 in 4 Americans cannot actually afford a $400 unexpected medical expense, and so we have this savings vehicle that helps prepare people for those types of events.
60 million Americans have one. I think CNBC, I think we have with your company. We have one. What does the new bill do? It could expand access to 20 million more Americans. How? By changing what?
So it's changing the eligibility of those that were previously excluded from the opportunity to
older
invest in
Americans,
HSAs. So Medicare A, which would be retirees that are entering into the market, if you'd signed up for Medicare Advantage and you had an employer-sponsored plan, you could not contribute to an HSA. So that was one area of expansion. Other areas of expansion provided more flexibility for people to use, for example, in preventative wellness opportunities, to be able to use your HSA dollars, for example, in a gym membership or for a primary care doctor.
Gym memberships.
Yeah.
That's new.
Yeah.
Look, I have to say my biggest problem with HSAs in general, and this has been a while for me, is just how complicated it is to get reimbursed. It's your money that you've set aside, and the hurdles you have to jump through make it pretty complicated. Can you make that easier?
So we're really trying to prepare Americans to be able to save, invest, and to spend. And what previously was the challenge is that a lot of those reimbursements came through paper-based processes, forms. Now
when you're sick, by the way, trying to get reimbursed when you are already sick or you've just had a baby or something along those lines, it's pretty complicated. The reason I've never put any money in an HSA again was because of some of the paperwork, the red tape, while I was on maternity leave.
And now you can take a picture of that receipt on your phone. We'll process that automatically, reimburse that instantaneously, It's seamlessly integrated into your digital wallet, Apple Pay. Use it on a marketplace like Amazon for HSA qualified expenditures. So we're trying to make that process seamless to, again, help people prepare for their medical and health expenditures.
I mean, the articles point out how attractive it is in terms of tax breaks. If you use it properly, almost to the extent that it could become as common as a 401k or as useful as a 401k. Why aren't you hearing any backlash from in this bill that there's too many tax breaks here for HSA accounts?
Well, the regulatory regime for HSAs has been around for a couple of decades, and it's the most tax-efficient savings vehicle for healthcare. And so how it works is that you can contribute pre-tax, it can grow tax-free, just like a 401k, and then you have to spend it on healthcare-related expenditures.
Not right away, though.
Yeah, it can grow over time.
But you could even incur costs and not even take it out till years later.
As long as you have proof of a receipt for a medical expenditure, and so it's very tax efficient.
It's not just a medical procedure, it's also that it has to be for a mandatory nature, and that's where I got into trouble with them. They were arguing back and forth with me about whether I needed some of these medical procedures, and when you're sick, it's really hard to deal with that.
Yeah, it's frustrating when you're denied coverage, but again, I think what we're trying to prepare for is just the reality for retirees as an example, which is a big part of this legislative expansion. A retiree couple needs about $400,000 in savings for healthcare-related expenditures, and 1 in 5 are going to outlive their savings. And so you need actually a vehicle to help prepare for that, and then obviously, to your point, seamlessly integrated when you want to,
right.
When you need it.
Right.
Well, get some good AI type help on this, and you ought to be able to streamline it.
He's got something. And I guess that's the other frustration. Like, AI would be great if you can process things more quickly and get it there, but if I get turned down by an AI agent instead of a person, I'm going to be even madder.
It's a delicate balance to make sure that we can deliver on our members' expectations and to be able to do that more efficiently. And AI
can I talk to a person? Like, you can get the AI to do all the easy stuff and push it through quickly. If I have a problem with that, can I still talk to a person?
Absolutely. We still have phone-based support, but and we're really trying to, again, make that process that you're going through that's previously form-based and frustrating to be seamless, efficient, transparent, and again, help you at that point in time in real time. And that's where technology and automation can, vastly improve the consumer experience.
Has the IRS gotten more complicated? I know they did around 2011. That's when I had an issue with them, when they really tightened some of the hurdles you had to jump over. Has it gotten easier since then?
It is, and the burden is on the taxpayer to show that the expenditure was related to health care.
Can I just tell you, you said January 6th is your birthday, so I'll show some personal stuff too. They questioned whether my episiotomy was for cosmetic purposes.
Oh, that's terrible.
That's why I've never put another dime.
Saying the Insurrection Day is my birthday is a long way from what you just said.
But
okay?
I will just say,
I did not open I'm not taking the rap for this. I did not open the floodgates for that.
But that is my problem with it. Like, the idea that when I was sick and trying to keep a new baby alive, to be arguing with them about some ridiculous, stupid questions like that, and not be able to get my money that I had set aside for this. That's why I have been turned off to HSAs ever since. It hasn't gotten better.
Well, there's also a difference between HSAs and FSAs. So FSAs would be a use it or lose it type of vehicle, which we also administer. An HSA, again, we have all of our platform integrated with the plan and the providers. And so again, when you go to a procedure, when you have a healthcare expense, it's integrated into our platform, and then it's seamlessly and in real time reimbursed.
That's an on-the-moment procedure, which happens a lot.
Yeah.
There's a lot more we could talk about, because we've got, this is just another part of our very complex and interconnected healthcare system in this country. And I'm just, is there fraud? Does this help prevent fraud? Does it help hold down costs? These are all things we need to do. Look at this whole bill. It's all about Medicaid and Medicare and everything else.
We have to remember that we do have an affordability crisis in America. So healthcare is increasingly out of touch for most Americans, and we need things to be able to help them prepare for those events. And what we believe is that we have this opportunity, despite things that you're talking about, to really help educate Americans on this opportunity, but also to be prepared for these unexpected events that we all have in our lives, and to make sure that we're thinking about an HSA as an example, much like you would as a 401k, that you're preparing for retirement, in this case, preparing for a future healthcare need or medical crisis.
It makes sense. I mean, it is the proper way to plan for things. And if you can make it easier, particularly with AI, that would be great.
Yeah.
Scott, thank you.
Appreciate it.
Appreciate it.
All right, when we come back, some potential mixed signals between the economy and the markets. We're going to check out how the Fed may be interpreting the recent inflation data. And in the next hour, Senator Ron Johnson on the reconciliation bill, what he doesn't like about it and how he would fix it. It's coming up at 8:30 a.m. Eastern Time. Squawk Box will be right back.
Pumpkin.care.
All right, welcome back, everybody. Confusion surrounded last week's inflation data as some figures aligned with expectations, while others, like core inflation and personal income, diverged. It left analysts unsure how to interpret the overall economic picture. Joining us right now to hopefully shed a little light is Nick Timmeros. He is the Wall Street Journal chief economics correspondent. And Nick, lots of people were surprised by how those numbers came out last week. What do you think happened?
Well, I think the surprise was just around the size of the flows, the trade flows on the trade deficit. and coming up with a forecast for these things right now. I mean, it's not quite as difficult as 2020 COVID, but we're running a policy experiment we haven't really done before. So I don't know how you come up with a consensus expectation for any of this. I mean, the bottom line is that the economy looks okay. I think the worry would be that it's a lot easier to see the headwinds right now than to see where the tailwinds are going to come from. On the inflation numbers, Becky, I mean, 2.1% headline PCE, 2.5% core inflation. If you went back 2 years and you told Fed officials in the Martin building you're going to have 4.2% unemployment rate with the inflation rate coming down like this, and you'll have cut 100 basis points, I think they would have given their left arm for that outcome.
But then you've got Fed officials like Waller saying, hey, we're in a pretty decent situation here. These numbers are pretty good. You've got Austin Goolsbee saying things like, well, look, maybe we could cut rates sooner if we can see through some of what's happening with trade at this point. Are things a lot better than had been expected? And when do we finally get numbers that we say, okay, this is a real read? You can't write off numbers for forever.
You can't. I think the interesting debate right now is around answering this question. What is going to nourish inflationary pressures beyond a one-time increase in goods prices? So you're right. Chris Waller in Korea on Sunday night laid out the dovish argument quite well. You can tell somebody from the University of Michigan, I think inflation is going to be 6 or 7 or 8% next year. But if you go to your employer and you try to get a 6 or 7 or 8% wage increase right now, they're going to laugh in your face. So his point is, what's the mechanism to sustain a rise in inflation expectations through the wage channel? This is not 2021, where housing was overheated, where labor markets were overheated, and where the funds rate was very low. This is a different situation. The other argument Raphael Bostic at the Atlanta Fed made yesterday is, well, the way that we're rolling out these tariff increases, you can't just assume this is a one-off. You're doing it in a way that could mess with the psychology around inflation. I asked Steve Moran, the CEA chair, last week for an inflation forecast this year, and he wouldn't provide one. He said policy is too unsettled. So you could argue, that is not price stability when people cannot forecast prices a year ahead.
Nick, can you just go back to that trade deficit number and explain it a little bit? Is it possible that the previous month people were front-end loading and that they had already done it? Or because the expectation, I thought, was that it was even going to be wider than expected because everyone was going to be trying to stock up on things before the tariffs hit. Instead, it was cut in half, which if you were a total optimist or a half full person, you'd say, oh my God, this stuff is already working. It's already working that we're importing less. Is it going to be revised up? Is the next month going to be a huge number in terms of the deficit? What's happening?
Those are the right questions. I'm not sure we know. You look at some of the port traffic data and you thought maybe you'd see a big resumption of shipping after the honeymoon in Geneva last month, and you haven't seen it. So, I don't want to look at GDP now and all of these real-time trackers right now until trade flows settle out. People drove themselves crazy looking at the big negative numbers in the GDP Now series last quarter, and I think you can drive yourself crazy looking at the big positive numbers right now. It's almost like you just have to set all of this to the side.
So we have AI, and we're even worse off in trying to tell you what happened. So we still don't know, and AI is useless, and you can't help me. So did you look into the actual numbers, and were there weird things it's like the GDP number? We know what happened with that. How did we cut the trade deficit in half?
Well, you cut it in half because imports fell a bunch. I mean, I don't think there's much missing there, right? We imported a lot in the first quarter, and then we cut off the trade flows in April, and now you're seeing the other side of that. And I think the big question is, what kind of a rebound do you get? The big question for the Fed is going to be, do you actually see a pass-through right now of these prices? So I think the big question for the June FOMC meeting, you won't have seen it. I mean, we get one more inflation number, but you probably won't have seen a lot of the tariffs into prices. You have to put down an inflation forecast. They're going to do another SEP at this meeting. So what's in the inflation forecast? Do you change the interest rate path for this year based off of, you know, a lot of policy change, but not a lot of real data that's telling you this is happening?
Americans never stop consuming. So if we didn't import it, we're making everything here already, Nick. It's already happened.
Spend a lot on
We're
services.
depleting those inventories.
Okay, we're depleting the inventories. Okay, that we
Nick,
are.
do you think the Fed will cut rates the second half of the year a couple times?
You tell me what happens with the labor market. You know, it really comes down to that. This idea, you know, Chris Waller's clearly on an island right now with this good news rate cut story. You can tell the story, but you've got to get other people to come along. And the rest of the committee right now, you hear them communicating, we're okay staying here until we see something happen. And the something happen is the labor market cracking. And so until you get the unemployment rate moving up, it is very hard to see this Fed cutting interest rates.
So the Friday jobs report is really important. The ADP report is very important. We're going to be watching all these numbers really closely.
Yeah, you'd want to see not just 1 month move up in the unemployment rate, but a couple. So, you know, you could rule out, I think, a July rate cut with a decent report this week. It's hard to see what gets the Fed to cut interest rates if you don't have spending weakening, claims moving up. And so again, I think the question for the June meeting is, what are they going to write down in that rate path? The path of least resistance would be to just stay where they were in March. They had 2 cuts as the median in March. You could just stay there. Why move things around? You're providing some false precision that you don't have. The minutes last week said they had the staff revised up the inflation forecast. They don't do that lightly. And the FOMC anchors off of the staff forecast. So if you think inflation is going to be higher this year and you might not be on that path back down next year, you take cuts out in the 2025 rate path.
Nick, thank you. Nick Timmeros, we appreciate it.
Thank you.
Coming up, we're going to have more economic data on the way. The ADP employment report for May will be released at 8:15 a.m. Eastern Time. First, though, the $80 trillion question for wealth management firms. How will the next generation of millionaires? Will there be any millionaires in this next? Oh, we're going to leave them all the money. Now I understand. So they will be millionaires. Robert Frank's Inside Wealth Report. No, there's a lot of it. Squawk Box below.
Time now for today's Aflac Trivia question. Which Bruce Springsteen album was released on this date in 1984? The answer when Squawk Box returns. DC. And now the answer to today's Aflac trivia question. Which Bruce Springsteen album was released on this date in 1984? The answer? Born in the USA. It has sold 30 million copies worldwide.
Wealth management firms getting ready for the next generation of millionaires, those that will inherit their money and their assets from yours truly, the baby boomers. And they may be thinking differently about investing. Robert Frank joins us now with today's Inside Wealth Report. And if I spend it and leave them a bunch of bills, what are they going to do with that? Exactly.
You're going to leave them.
I'm going to leave them. That's all
you
I
love
think.
your kids.
That's all I think about. I'd like to leave them as much as we still don't spend money because we're thinking about that.
That's true. But we do have other people, a record amount of wealth being passed down to younger generations. But how that younger generation invests and who they invest it with is about to change. It's called the Great Wealth Transfer. More than $100 trillion going from baby boomers to Gen Xers, millennials, and Gen Z by 2048. But that next generation won't be using their parents' wealth advisors. In fact, 81% of the next generation millionaires, or those about to inherit wealth, say they're going to replace their wealth advisor once they receive their inheritance. That's according to a new survey from Capgemini. Now, the main reason was a lack of digital tools. Young investors, of course, they're digital native. Many wealth management firms are still stuck largely in the past.
This is not a let's sit down with you once a year and walk you through how your portfolio is doing, or once a quarter and walk you through how your portfolio is doing. This is an active engagement channel, and with consumable nuggets of information that they should get.
So what does the next generation want? Well, they want more than just stocks and bonds. They want more private equity. That was an interesting finding. Of course, they like crypto, and they want more overseas investments. And they also want lifestyle advice and everything from healthcare to wellness, travel, and cybersecurity. Now, for more on the Great Wealth Transfer and the next generation of investors and what they want, you can sign up for the new Inside Wealth newsletter at cnbc.com/insidewealth. That's cnbc.com/insidewealth.
Who provides that stuff? If it's not the old line wealth management firms, I mean, are they looking at any place that they think, I don't want that, I want this, like Andrew Haberman or something? Like, what are they?
Well, the wealth management firms, what they're trying to do is provide more products. They're trying to provide more technology. So the hope is that these wealth management firms, after this report and others, will get the message that we need better technology. We need apps that will allow people to every minute look at their portfolio, make trades that they want, as opposed to this once a quarter paper report that you get, or once a year meeting with your advisor.
So they want Robinhood.
They want Robinhood, and they also want a wide selection of products where you can get private equity, where you can get crypto, where you can get even direct investments with you want. And so I think that broader product array is where these firms are going to go, where you're talking about the banks, the private banks, the wealth management firms, the RIAs.
And I want an Amex that's going to give me travel advice and discounts on stuff, and the best way access into things. Basically, you got to wrap it all up in one package.
What they want, not just Amex, they want these concierge companies that provide like
stuff.
special access to events and concerts, as well as the health and wellness stuff. But look, when we're talking about $100 trillion,
the biggest ever.
This is going to
even adjusted for inflation, it's got to be. I mean, I would like to delay it a little bit longer than the previous generations. That handoff at this point, if possible.
But it's that amount of money is going to be transformative, not just to the landscape of wealth, but to the huge business of managing wealth for the wealthy. And so that's what everyone is getting used to. This generation is not just younger; they are different, and firms have to react.
I mean, my father hardly ever made. He made, I think, $30,000 a year, and they left me almost. I mean, and that gets you started. It really gets you started. It makes a huge difference in a person's life when you
buy a house.
Right, and we even tried second to dime. Sure, I'm doing all I can to try and maximize whatever it is. Because, King Tut didn't work for him.
Well, and that's why estate planning and taxes have also become...
Yeah, but he tried to take it all with him with his gold and all the stuff in his...
That's one way to transfer wealth. Build a pyramid.
Thank you.
Thank you, guys. All right.
right, when we come back, a rundown of today's market action. And as we head to a break right now, check out the market cap of the most valuable publicly traded companies. NVIDIA passed Microsoft yesterday, regaining the top spot. Squawk Box, we'll be right back.
Insurance.
Welcome back to Squawk Box, everybody. We're in the green this morning with the equity futures. Dow futures up by about 63 points. S&P futures up by 10. The NASDAQ up by 33. Treasury yields have been a little higher this morning as well. The last I looked, the 30-year was just below 5%, 4.98 right now. The 10-year's at 4.46. The 2-year's at 3.96. And then oil prices, which have been on a bit of a tear, are up another 3 cents this morning, 63.44. You've got Brent crude up to 65, 67, and natural gas giving back just a little bit down by just fractionally at this point.
Coming up, an update on the deal-making environment, both here and in the U.S. and in Europe. Orlando Bravo, founder of the private equity firm Thoma Bravo, will be our special guest. And in the next hour, Senator Ron Johnson on President Trump's reconciliation bill. That's at 8:30 a.m. Eastern Time. Squawk Box returns in just a moment.
DC.
Some of the biggest names in private equity are gathering in Berlin this week for the Super Return Conference. Leslie Pickard joins us now with a special guest. Hey, Leslie.
Hey, Joe. Good to see you, and thank you very much, Orlando Bravo, for joining us today, the managing partner of Thoma Bravo. So we're here at this private funds conference, the biggest of its kind, and you come out with an announcement that you've generated about $34 billion in fundraising, which is a huge number in an otherwise extremely tepid fundraising environment for private equity right now. How confident are you that you can deploy this capital and that you can ultimately see realizations from those investments given just the current environment?
Leslie, it's really good to see you. This is like a yearly tradition here at Super Return, which is a nice celebration of private equity. I'm really happy to be here. Oh, we can deploy that and we can deliver. If you look at what we've done during the last 18 months, and that led to this fundraise, is we returned back to our investors in 18 months over $20 billion in cash. And private equity is all about performance. And a bit of the slowdown that you're seeing in the industry is because private equity isn't selling. We have never stopped selling our companies. If you can buy the right company and add a lot of value, you have enough room to give that buyer additional value, and you can sell your businesses and continue to get money from the investors. Now, then there's our ability to deploy it. We have never stopped buying either, which is very, very important. Private equity is not about market timing. As we say, we never buy the index, we never sell the index, we buy a specific company. So if you look at our trajectory through 2020, through the peak of 2021, through 22, 23, 24, and even recently with the Jefferson deal, we have been consistently buying the software companies that we love. And our strategy consists of two key parts. We buy the number one player in software in a given category, and we look to completely transform that company operationally and from an M&A standpoint. There is so much opportunity in software to do that. I mean, we have the pick of thousands of software companies, many of which are growing extremely well, even in this market, that we can work with those management teams and improve.
It's a fascinating anecdote to the broader market, which has seen a lot of capital deployed in 2020, 2021 when rates were low. A lot of private equity firms overpaying for assets during that time frame and are having trouble. They're struggling to find exits, whether it be an IPO or M&A, because there's still somewhat of a valuation gap. You're not seeing that in the companies that you acquired during that time frame and the willingness to pay among the, whether it's the equity capital markets or various suitors out there, various buyers?
We are not. And that was a question that our great investors would ask us, and they did some great due diligence during the process, is what happened to those deals that we bought when the index was high? One of the best examples of that, and I've mentioned this before, is we bought a Denza, literally at the market peak. If you look at the NASDAQ index, the past market peak, because now it's higher. And we were able to sell that company to NASDAQ, generating a 35% IRR on a lot of capital, and that deal worked for NASDAQ. What matters in private equity, you're buying a business. People come up with a model. They say, okay, I can afford to pay this based on the value that I can add and my future cash flow and my expectation of a future multiple. People overpay when they miss their numbers. People overpay when the company, they haven't added enough value to the company. Or people overpay when their future exit assumption was too optimistic. For us, we've been doing the same thing now for 25 years. Buy quality, add so much cash flow to our companies, and make sure that we're having reasonable exit assumptions. And that's been the case. That's why we've been able to sell all these companies over the last 18 months.
Now, a big theme in the private equity industry has been kind of the democratization of alternatives and access to retail investors. You have $184 billion in private equity specifically. Do you plan to expand that to retail? Do you like the prospect of democratizing the alternative space?
I like the prospect of democratizing the space. It is a really, really good asset class. That is why the best investors in the world, state pension plans, sovereign wealth funds that have so much capital, choose this asset class and have been actually growing it as a percentage of assets overall. Providing that opportunity to retail. Retail has many definitions. You can go to the ultra high net worth, and you can go all the way down to smaller investment sizes. I think that is a great thing. Now, at the same time, the industry has to be extremely careful about how to do it, because the first experience from that channel, from the retail investors into this category, is going to be instrumental into whether there's stickiness to it or not. So I have said before that I am cautious about these continuation vehicles that get sold to retail. There might be too many conflicts, too many different groups of investors. But overall, if retail picks the best managers that have a strategy that works in any market and are on the same basis and investing in the deal at the same time as institutions, I believe that's a very good thing.
All right, Orlando Bravo, thank you so much for being here from Super Return here in Berlin. I will send it back to you guys in the studio.
Leslie, thank you very much. That's our Leslie Picker. When we come back, a CNBC exclusive inside a nationwide retail crime crackdown as law enforcement and major retailers team up to target a surge in theft. Squawk Box will be right back.
Pitch.com.
Retail theft has surged nationwide. Now, law enforcement agencies across the country are joining forces in what one state's attorney's office is calling a first-of-its-kind nationwide law enforcement blitz to try and curb the rise in retail theft. Illinois' Cook County Regional Organized Crime Task Force led the nationwide effort between law enforcement, the National District Attorneys Association, retailers, and the Retail Industry Leaders Association. So far, 11 out of the 28 participating states reported more than 400 arrests in the last week. Here's Courtney Reagan with the story.
Retail theft crackdown along one of Chicago's premier shopping districts. CNBC had exclusive access in Chicago, Ventura County, and Los Angeles as police arrested shoplifting suspect after suspect. Our cameras followed Commander Michael Ware in Chicago.
I have at least 2 undercovers in each store with their loss prevention. As the loss prevention members on either one of my undercovers inside observe the subject concealing items and they pass the last point of sale, the coordination, we have our store members outside ready to make the apprehension.
So far, 8 out of the 28 participating states reported more than 300 arrests, and more than 30 retailers took part in the operation, including Walgreens, TJ Maxx, Macy's, and Target.
When you give specific focus to a crime, it reverberates. When they see it's being prosecuted, it's being taken seriously, it absolutely deters conduct. They don't want to get caught.
Retailers reported a 93% increase in the average number of shoplifting incidents per year in 2023 versus 2019, and a 90% increase in dollar loss due to shoplifting.
The problem of retail theft has decimated our retailers in Chicago and throughout the country.
Back in 2024, our CNBC investigation showed in some cases that thieves are part of organized retail crime groups, stealing goods to sell for cash.
The idea is let's have one day where we focus and we concentrate on it. We share what we learned about these organized crime networks. So then that gives us more tools to take the entire network down.
Home Depot, which took part in the blitz, told us while overall theft is down, organized retail crime is still on the rise. Ulta Beauty says it coordinated teams across 9 states for this blitz. Other participating retailers we reached out to, including Macy's, TJ Maxx, Walgreens, and Target, said they're committed to partnering with law enforcement and pushing for stronger laws to combat retail crime. And we have a fuller piece that's going up soon online about this blitz that, again, was called by the agencies that coordinated this, a first of its kind sort of national crackdown. Mass arrests, 400 so far in counting.
I mean, how much of this is just the local laws that are part of the
So
problem?
that definitely is a critique, and that is certainly part of it.
It's not a felony anymore to walk out with $1,000 worth of stuff.
Right, and so we talked to Illinois because our cameras were there in Illinois, and we talked to that state attorney, and sort of from day one, part of her platform was that she was going to be more aggressive than her predecessor. And while the state law was that any felony could be prosecuted for shoplifting over $300, the predecessor's office really didn't go after folks unless it was $1,000 and more than 10 previous convictions.
Well, that's good to know.
So she decided to crack down on it, and they've said that so far since she took over in the beginning of December, that they have had 1,450 cases of shoplifting that they have gone after. Shoplifting or retail theft or organized retail crime, it sort of depends.
Well, call it what it is.
Well, it depends. Sometimes it is shoplifting, and sometimes it's organized retail
No, what do
crime.
they call it, though?
Oh, shrinkage. But
And
one part of shrinkage or shrinkage in retail in general is just a loss.
All right, and I told you there's another term, and we couldn't come up with AI. Will always come up with it, where you go outside your area.
Yeah.
Another thing that's no one needs: leakage.
Oh, leakage.
Shrinkage and leakage.
Right.
I mean,
I was like, what are you trying to?
no, retail leakage. It's or out shopping. It's called, but AI knows everything. I said, what is that retail term for going to like a big box retailer? That's not.
I wasn't understanding what you were trying to get.
Leakage.
Leakage. Of course.
Shrinkage and leakage.
Why is there so much more organized retail crime? Is it online? It's easier to fence this?
Yeah, I mean, unfortunately, a lot of the folks we talk to is the online retailers and the marketplaces have made it fairly easy. Unfortunately, even though they are doing their best to crack down, it's like a game of whack-a-mole, right?
And technology.
Yeah, and then you go after one person and sort of their individual information. They just create a new account. They do it again. The product is gone. In some cases, it's even like a Facebook marketplace. So it's not. They're not technically set up as a retailer, right? And so it's a peer-to-peer. How do you sort of get involved in that?
It's a confluence of things kind of coming together.
Absolutely, and again, I think that the bigger fear, I think, is just that the cash that is gotten from selling these goods is then used to fuel other criminal enterprises,
Right.
And that is a bigger concern of that ripple effect.
Well, and just the idea that you're losing stores.
Oh, of course.
Within these, a lot of times urban areas and other places where you're going to get destroyed.
I think the rest of us are getting pretty annoyed about pushing buttons to get toothpaste and stuff.
Smash and grab video.
Yeah,
pretty wild stuff.
And what are employees supposed to do?
Right, you're not supposed to. In fact,
And
most of them will tell you you're not supposed to get in the way of it.
And again, that's another part of the problem is because it's underreported. No one's reporting because you got to get involved with the police and the paperwork. The employees aren't supposed to do anything. And
Here they're out in an hour, coming back to the store.
Exactly.
Right. Courtney, thank you.
Thank you.
Help them push the shopping cart forward. Coming up, investing in AI, Ben Narrison, founder of Tenacity Venture Capital, is going to tell us where he's placing some bets on the technology. Squawk Box will be right back.
BC.
In the past year, nearly half of venture funding is going to AI-related startups. Probably not that surprising. That's according to Crunchbase analysis. Joining us now is one investor who's bet on companies both outside and inside the AI ecosystem. Ben Narrison is here, founder of Tenacity Venture Capital, which invests in seed stage companies. You're too old to understand all this stuff, aren't you? I mean, do you have a bunch of 20-year-olds beating the bushes? And you're younger than I am. That was not a rap. But isn't it hard for you?
With age comes wisdom.
Do you have a bunch of people working for you that are scouring the ranks of these companies out in Silicon Valley, or?
So I've been doing seed investing for about 18 years. I've funded about 180 companies, and those founders are my eyes and ears, and they're also my diligence. Like, I funded a company recently called Hippocratic, which is now a business that augments nurses to make calls to you when you go home from a hospital or doctor's visit. And Munjal Shah, who runs that company, I've known for 20 years, he is probably one of the most knowledgeable people I know around AI. So we would literally get together for breakfast every week and talk about sort of how this was evolving over the last 18 months. It took me 18 months before I made my first AI investment, because I did need to have a point of view. You can't just blindly say, oh, this is good.
I mean, I can't imagine that. I guess I was speaking for myself. I can't imagine trying to navigate through. And there are a lot of startups with kids that are like 25 years old.
Oh, yeah. I mean, that might be too old at this point. You know, look, the way I thought about this is when you go back to the beginning of the internal combustion engine, when the car was invented, there were 2,000 car companies in the United States. There were 2,000 car companies in Germany. And so for a long time, I was like, well, how am I so smart I'm going to figure out who Ford would be? But then I thought about it and I said, well, you know, Ford had a very specific point of view. They had something novel in that the production facilities were set up in a totally different way. And so I do think...
And they were marketing to the masses.
Yes. And you've got to find a reason why you can believe. Look, some of these AI companies,
are going to be the biggest of the big, multi-trillion-dollar companies, but there's going to be a lot of blood.
So what's the equivalent of the production line or some other novel device, especially when people talk about the commoditization of all these tools?
So the problem I still suffer with is that engine is not novel. So what makes you distinct? And I've come to believe that data is only a temporary mode. A lot of people talk about the value of their data, their proprietary data. That's temporary. That data is going to get sold over time. Because if you can make an extra 10 million a year by hoarding your data for yourself, but you can make 100 million a year by selling it to other people, you're going to sell it. So I think first to brand is very important. I think there are markets like the ones where you can't afford to be wrong, medical, legal, things like that. You can't go in front of a judge with some hallucination and say, but ChatGPT told me this.
So who's doing the best when it comes to, let's say, medical? Because I think that's pretty.
Well, I do love Hippocratic. I'm an investor personally, but what they're doing is they're literally having the LLMs call. Imagine this. So today, I don't know, 1,000 people go into a hospital a day in some city. They go home. Some of them get calls for follow-up. Now, all of them will get calls, and the LLMs can navigate and figure out whether you're doing what you need to do and be helpful to you. And they also, here's one of the things that's fascinating about AI that people don't think about. It fundamentally changes the value proposition of time. You call in for help somewhere, the person on the other end of the phone is getting paid by the hour. They want to get off that phone. You talk to an LLM, it will talk to you for 12 hours.
Yeah, but will it give me the right answer? There's nothing worse than calling in and get a machine and just say, customer representative, get me out of this hell.
I am that. I am like representative.
I won't talk to him at all.
But the difference is the LLMs will actually interact with you at a level of intelligence that's sort of stunning. I mean, most of the people I know in AI are telling me already.
I've never met one of them so far.
Of course, because they're digital. But I've never had
a call from one of them.
That's fair. Well, hopefully you won't, because you won't be coming out of a hospital. Although I'm sorry you had that bad experience with it's just that. But it's you were watching. Have an all-knowing system that can sort of ingest all the information and provide it back to you accurately. Mm-hmm. Now the trick is it accurate? But I'll give you an example, going back to the medical one. If this is following up with you, and you say, well, how have you been feeling since you got out of the hospital? And you say, well, I have some shortness of breath, immediately sends you to a human being. It knows when you're in a danger zone.
If I ask for a human, like if I'm really sick and I don't feel like dealing with this and I'm not trusting it, is there an out that says usually customer representative human?
Yeah, I mean, it's funny. I was listening to a call exactly like that where the customer did not want to talk to the AI, and the AI actually negotiated with them to show him that it was useful and let it stay on the phone. The guy finally laughed. He's like, okay, fine.
Fine, help me out. Yeah.
But there's so many. Look, if you think about the evolution of technology, I started one of the first web businesses here in New York City in 1993, took it public on the NASDAQ, got on the little screen above us. The web changed most things. Mobile changed many things. Yeah. Crypto didn't change anything licit. It created a bunch of random currencies that can be traded in arbitrage. So that was, people called it Web3. That was an idiotic term. But AI will touch literally everything, one way or the other.
I believe.
You had 2,000 pitches and only 3 of them were AI. So you do other things. I read that you invested in a wildfire fighting robotic system.
Very excited about that one. Just closed that deal Friday.
I just happened to know that the Montana senator was involved with that. It's different than that. Tim Sheehy had a drone and I guess airplane company to fight. So this is different than that. This
is a Canadian company called Wildfire Robotics. And what they do is imagine a triple-bodied snake that slithers into the fire, delivers water and flame retardant, can do it at night when the fire's the weakest.
It's not aerial.
No. And then when the troops go in, the stuff's there for them. So it makes it safer and better, and it can push back the fire. They can do up to a 5-mile-long fire break. Wow. And you think about, venture is really about finding opportunities that can be stunningly huge and cover most of the world. Yeah. It's not about, the acquisitions. I'm not dismissive of somebody that has a $300 million acquisition and it changes their life, but I want to see companies that can be, I have an AI company that is able to act as sort of a chief of staff inside your software. It's called Maestro AI. And so it watches all your people and it tells you where you need to help or where someone's doing well. It just, imagine you as a CEO or a manager, you've got 300 people, you don't know what they're doing, but the AI will. I can watch that and be super. That's useful to any business over 10 people.
Watch me how? Watch my.
Well, right. It starts with the engineers. So it's looking at the code, and all of that. So it'll evolve. But I would love. There was a off
It'd be nice if a
Broadway.
manager could actually check in and see how you were doing, or care about those things instead of how quickly you're working.
Well, realistically,
Practically.
businesses care a lot about. When I was running my public company, we used to do once a week stand-ups, and I would say, "How was your weekend?" And that last 30 seconds. Then we'd be like, "Okay, now let's talk about what's going well, what's going poorly for you in the business." It's a business. I don't need. Maybe it's my generation.
What's going well in your business? That would be useful.
Exactly.
That would be useful.
Of the team you have, what are the things that are going well? What are the things that are
I
falling
need somebody to
behind?
hold my hand and ask me how my weekend was. But
I
it'd be
know,
nice
but
to check in with
I will
me.
tell you that the current generation seems to care a lot about a little more of the touchy-feely stuff.
Good luck with that.
Yeah. Ben, thank you.
Hey, thanks for having me on. I always enjoy it.
It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick along with Joe Kernan. Andrew is off today. Among our top stories this morning, President Trump weighing in on trade early this morning, really early, like 2:30 in the morning. On his social media network, the president posted, "I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with." The White House has said that Trump and Xi would likely speak about trade this week. Elon Musk blasting President Trump's signature tax and spending bill recently passed by the House. In a post on X, Musk called the bill a disgusting abomination. We haven't heard yet from President Trump on Musk's comments, but Speaker Johnson has made some comments on it, suggesting that Elon Musk is in it because he's mad about not getting his EV and solar tax credits. And the Fed announcing it is lifting a nearly $2 trillion asset cap imposed on Wells Fargo 7 years ago. That followed years of missteps at the bank. Don't miss Wells Fargo CEO Charlie Scharf in the next hour on Squawk on the Street. This was a really big win for Charlie Scharf.
And checking the futures this morning, up again after a pretty good turnaround in the first 2 days of this week from early morning weakness in the futures, and then we closed higher. And a nice day yesterday has the S&P now less than 3% from an all-time high, and some more upward momentum this morning. Let's get to the markets. It's Mike Santoli. I don't know, Mike. We've seen markets like this before. By all, they should be going down. It should be going down. There's worries, front and center, tariffs, all these any given day, and maybe they still will. But they seem to find a reason or no reason to go up, and usually that might continue. Do we get to new highs in your view soon, Mike?
Yeah, I mean, I think the odds do favor getting to new highs relatively soon. That's what all the historical pattern stuff would tell you. And as you say, the character of the market recently, this persistent bid, especially intraday, it just has the feel of a market that is feeding on the lack of fresh news. The more of the same is okay when it comes to the economic numbers that are coming in. We can deal with a wait-and-see Fed for the moment. Look, maybe this is just a window in time when that's all going to work and the market's going to grind higher because people felt underexposed to the market after that big sell-off. You know, it's interesting because it has been this persistent rally, one of the stronger rallies off of a 20% drop that we've seen in history, and yet we're back to levels that we first got to about 7 months ago. So that's why you're going back on ground you've already covered, and obviously it's also been a narrower market. I shouldn't say narrow in terms of the number of stocks going up, but in terms of the leadership and where the push higher is coming from. Take a look at the momentum ETF. This is the momentum factor within the S&P 500. Basically, the strong staying strong, leaders continuing to lead, and that's made a new high. And that's not just technology. Yes, it's Broadcom, it's Netflix, but it's also Berkshire Hathaway, Walmart, JP Morgan, Visa, Costco. So kind of industry leaders, and this again is the way the market's saying people just want to get involved. Maybe the Sell America trade got overdone in the short term, and now, at least for the moment, this persistence of strength is hanging in there. It's not telling you that much about the macro, except people want to get back involved in this market. Now take a look here at one area where the backup in bond yields really is taking its toll. This is the home builders, and this goes back 3 years. So, you know, you're really kind of on this shelf from this high from back in 2023. We do have more supply of existing homes, and this is no longer kind of a leadership group. So right now the market is sort of localizing where the pain is in terms of rate sensitivity, although so far on the consumer side, you're not seeing really that much erosion. I think the market was actually feeding off of that yesterday as well.
All right, Mike. Yep, less than 3%. Thank you. See you later.
All right, CrowdStrike reported adjusted earnings per share above the expectations for its latest quarterly report, but the company's second quarter revenue forecast was a bit light. Costs rose in the just completed quarter, partly because of a broad software outage last summer. You can see that stock this morning down by about 7% in the pre-market. Joining us right now is Joseph Gallo. He is Jefferies' software research analyst. Joseph, what happened? Is this reaction from the stock appropriate?
Yeah, I think it's appropriate. So what happened was ARR, annual recurring revenue, grew 21.6%, but that was shy of elevated investor expectations, given the stock was up 43% year to date. And as you said, revenue was a little bit light in 2Q on the guide, and that was due to the discounting programs that they've given over the last 2 quarters, given the IT incident. We were cautious into the print because we've seen this movie play out a couple times this quarter with other cyber names. Cyber stocks have had a really good run year to date, and so I think this was broadly a good, not great quarter against high expectations.
Jim Cramer has the CEO of CrowdStrike on tonight. What questions would you ask of him?
I think the biggest focus areas I would say is, hey, how confident are you in the re-acceleration of net new ARR? How confident are you in the acceleration of total ARR growth in the second half of the year? You gave a lot of free stuff away to your customers over the last 2 quarters. Are they going to pay for that in the next 2 quarters? And then ultimately, everything trades on cash flow. What's your confidence in your free cash flow margin next year?
They are saying that they are buying back stock to show their confidence in this. You think that's money well spent?
Yeah, I think that's good money spent, but also I would like to see them continue to invest in the business. I think these are one of the more modernly architected platforms, and so I think you'll continue to see them invest. And then they also should invest highly in AI, and they've talked about looking at other AI companies to be the best position there.
Who are their biggest competitors? If you worry about them losing customers, where would those customers go?
I think that's the beauty of CrowdStrike long term. The 2 biggest customers are SentinelOne and Microsoft. And right now in the enterprise, you need best of breed, and that's where CrowdStrike really excels versus Microsoft. And then SentinelOne, fantastic technology, but unfortunately hasn't been able to execute against this opportunity. So we feel very confident in CrowdStrike's competitive position long term.
Okay, if that's the case, would you buy it here, or are you skeptical?
Yeah,
I mean, to see the sell-off.
Yeah, listen, I don't think that the sell-off is surprising given the slightly less than expected performance, but we're buyers here. I think this is one of the best positioned long-term platforms. They've got a clean competitive landscape. They do the hardest part of cloud security very well. And as I said, they're more modernly architected than a lot of the other larger cyber vendors. And that allows you to expand into other categories easier. And so I think you'll continue to see that out over the next couple of years.
Joseph, thank you.
Thank you very much.
Coming up, jobs data from the private sector. The ADP employment report for May is going to be released at 8:15 a.m. Eastern Time. We're bringing the numbers as they break. And Wisconsin Senator Ron Johnson will tell us why he wants to split the big reconciliation bill into 2 parts. Squawk Box returns in a moment.
Well, welcome back to Squawk Box. We are awaiting the May ADP private payroll numbers. Ahead of that, we're watching the futures as well. And we've been in the green all morning. It's a reversal from what we've seen the last couple of days. But the last couple of sessions, we've been in the red in the morning, and we have ended in the green at the end of the day. In fact, we've seen 4 higher sessions in a row for the Dow, 2 in a row for both the S&P 500 and the NASDAQ. S&P right now is only about 2.8% from an all-time high. This morning, S&Ps are indicated up by about 15 points. The Dow is indicated up another 93 points. The NASDAQ indicated up by 60 points. We've watched Treasuries this morning, and it looks like the yields are a little higher this morning, although that's been changing for the 30-year and the 10-year. You do see the 30-year at 497, the 10-year's at 445, and the 2-year is at 396. Finally, the dollar, which has been weaker throughout the course of this year, is down 8.5% for the year to date. It's unchanged this morning. May ADP payrolls showed a gain of 37,000. That was the lowest increase since March of 2023 and far below the estimates of a gain of 110,000. You had total private payrolls that were up by 37,000, goods down by 2,000, services up by 36,000. Non-farm payrolls, the estimate was up 125,000. And joining us right now to talk more about all of this is Neela Richardson. She is the chief economist at ADP. Neela, this is a little bit of a surprise on the headline. You want to walk us through what's happening here?
Sure. So the lower number is really driven by shedding of jobs in the goods sector. We saw manufacturing, which actually had some surprise increases earlier this year, shed jobs in May. So that hiring momentum starts there, but it extends through several parts of the services sector too. We saw losses in professional business services. We saw losses in healthcare jobs. So anyone who's looking at the Friday jobs print, remember that healthcare was a big, strong job creator last month. Trade, transportation, and warehousing also shedding jobs, also was up, trending up in the BLS report on Friday. But where I want to really clue in, Becky, is on small firms, because the smallest firms lost the most jobs in the May ADP report. I think that is something that we should all be paying particular attention to, because employment under 250, that's responsible for 70% of workers in the United States. So as goes small firms, as goes the labor market.
Well, I mean, that's been the big question. A lot of the policy changes that have come from the administration are things that large firms have a better shot at navigating. They can kind of lobby more effectively for it, and they have the ability to deal with some of these changes with a larger workforce. They can be more proactive on some of these issues. We've certainly seen that reflected in the stock market. The Russell 2000 has fallen well below what you would see with the other major averages. How does this compare, though? You're not talking about a massive loss of jobs. It's down 13,000.
No, we're not, and that's an important point. This is not a labor market that's collapsing. This is a labor market where hiring is hesitant. It doesn't mean that these firms don't want to hire or aren't positioned to hire, but there is an uncertainty weighing on that hiring, and we've seen that for the second straight month. So the good news, I guess, is that it's a market that could turn around. And I'd also point to leisure and hospitality, which saw 38,000 gains.
Yeah, that's a surprise.
And it matches the JOLTS data from yesterday, which saw the job openings in that sector and entertainment go up. So in terms of consumer resiliency, we still want to see movies, we still want to go and get our entertainment. That sector is still strong. Consumers are still expected to spend on things that bring them entertainment.
The Fed's going to be watching this very closely. We spoke with Nick Timmeros earlier this morning, who just said that even if you get a good jobs report on Friday, it's not necessarily something that would clear the way for the Fed to cut rates yet. But if you do see a couple of weak job reports, or at least the unemployment number moving higher over a couple of reports over a couple of months, that would certainly push the Fed to be more likely to cut rates.
This is why I think the labor market is solid, because if you look at the 14.8 million workers that we can match uniquely in our data set, it's all about pay. And for the Fed, I think it will be about pay and wages. And we're seeing wages stabilize at a pretty robust number. So if you changed a job in the last 3 months, according to our report, you're going to see about a 7% increase from one salary to the next. That signals a strong labor market in terms of wage growth. And I think the Fed will be paying particular attention to how wages are evolving over this time.
Neil, is it too simplistic to think that smaller firms might be more, have more tariff angst or more, the effect of tariffs hit them earlier or harder than big firms?
Smaller firms have less options.
That's
They're
what I mean,
price
yeah.
takers, they have thinner margins, and they don't have access to the capital markets. They're dependent on largely bank loans or friends and family loans. So we're talking about the smallest firms. They don't have the same options, and so that uncertainty in hiring, and also every headcount matters for a small firm. They can't take it for granted. They can't overhire as easily. And so within this caution that we're seeing firms of all sizes hiring more former employees back, again, trying to get the most efficiency from the worker, and that often means hiring someone you've worked with before.
But as a worker, it pays to leave. You're going to get more. You're much more likely to get a raise if you leave.
So if you can work the system, become a boomerang hire, leave, get a higher salary, come back to a higher salary, that's a good place to be in this labor market because it's still tight enough to support that kind of churn.
Let's take a look at yields. Rick Santelli points out that yields are down on this news. We've seen the equities futures give back a little bit too. Okay, now across the board, the entire spectrum, you are looking at weaker yields. The 5-year is now at 3.99, the 2 years at 3.92. The 30-year is still at 4.95, but it had been at 4.99 before.
Everybody's waiting for a Friday number, someday,
right.
A Friday number to show some tariff
weakness.
And
442 is the
so
tape.
125. I saw that on the screen. Is that the estimate for non-farms on Friday?
That's about it. So what that number, if it's above 100, I would read that as a solid number for the BLS report. I think
it's
that's
above
a
100?
number. If it's above 100, I think that we would take that number. I would just caution that there's no superheroes in this labor market. There's no sectors that are going to be dependable as job creators, and that's different than what we saw in 2023 and 2024 where healthcare and leisure and hospitality were almost always strong. I wouldn't depend on that for Friday.
Neela, thank you. Anything really weird that you think is the strangest thing in this report, or?
I don't think it's a weird report. Okay. What I would point to is that the hiring momentum from the beginning of the year has slowed, right, but wages continue to be robust. That means that firms overall are getting the productivity they need for the workforce, and to me that signals that layoffs are not imminent. Okay. So that's the takeaway for the report.
I mean, there was a time when a little weakness in the labor market would help the stock market because of
rate cuts would come.
It has to be a good rate cut, which is an inflation-based rate cut, not a weakness-based rate cut.
That's right.
Yes, but this is just very minor, and we don't even know if this is the start of anything.
We have seen 2 straight months of weakness, so I do have, it's gone a little bit more from minor in my mind, but as wages are holding up, that means that they can support the consumer. So if you're looking at the big picture of the jobs market, I would say that wages are the place to look, and that means consumers can keep spending with historically low layoffs.
Sorry to interrupt. I'm being told that the president just weighed in on something. I'll just paraphrase it. Too late, pal, should cut rates now before it's too late. Is that what he said, basically? Right after the AD item might be.
I think he's watching.
More than a coincidence that he did.
When things are uncertain, every data point is to look at.
ADP number out. Too late. Oh my God. Yeah. So, Neela.
I would take this number in the trend in which it is. We're seeing a little bit of softness in the labor market, and I think it's worth matching that with the Friday report to look at the big picture.
But you say it here and it comes out there. This was from you. Trump just did that because of the stuff you're saying, Neela. It's crazy.
I'm an economist, and the economy matters a lot, right? So
I hope you saw the ADP number on this show. Coming up, Republican Senator Ron Johnson is going to join us. He's playing a key role in the future of President Trump's tax and spending bill. But first, as we head to break, we want to tell you about a downgrade for Apple, Needham, going from buy to hold. And a note to clients, analyst Laura Martin calling $170 to $180 a better entry point for investors. The stock 21% from its December high at this point, but if you'd like to buy it even cheaper. Squawk Box will be right back.
Viciously.
Welcome back to Squawk Box. There's the futures right now, which have definitely come down a little. We were up 50, we're now up 8 or 9, or maybe we were up a little bit more. We're up 80, but nothing huge yet. But there was, you would say it maybe is after much lighter than expected jobs data from ADP, which I think, what was it? It was expected to be a little bit higher. What did it finally come in at? 38,000?
37.
37 versus. I think they're looking for 100. We have a big jobs number coming on Friday with 125,000 for the BLS non-farm payrolls. We'll see whether that number comes down based on what ADP said. Interest rates have dropped ever so slightly across the complex, but you can see, normally that would be construed as good unless it's for a bad reason.
In the meantime, Warner Brothers Discovery shareholders voted to reject the multi-million-dollar pay packages of CEO David Zaslav and his leadership team. The company said more than 59% of the shareholders who voted rejected the compensation, including Zaslav's $51.9 million package. The vote is non-binding, but the company's board did say that it takes the results of the annual advisory vote seriously and looks forward to continuing its regular practice of engaging in constructive dialogue with shareholders. Shares of Warner Brothers unchanged after this. Those shares are down about 56% since the company was spun off from AT&T and merged with Discovery in April of 2022. When we come back, the man who holds a lot of power right now on President Trump's tax and spending bill, Senator Ron Johnson, is with us live. That's next, right here on Squawk Box.
President Trump and Senate Majority Leader John Thune are pushing to get the Republicans' reconciliation bill passed by July 4th, but several senators are saying there needs to be more spending cuts. Our next guest has proposed a two-part bill. Joining us now, Senator Ron Johnson of Wisconsin. Senator, it's good to have you on. And I know the president really has always been pushing for one. That's why it's called One Big Beautiful Bill. What would how would that help your case or your cause by splitting it into two? How would you do it?
Good morning. Well, first of all, we'd actually have time to do the work to forensically audit every line in the federal budget, every program. You know, there are over 2,600 programs in the federal budget. We haven't taken the time. You know, Doe showed us how to do this, so we ought to follow their example. But you know, the bottom line is this is a budget reconciliation process pretty well devoid of actually talking about numbers. About the only number we heard out of the House was 1.5 trillion, which sounds like a lot until you put it in context of the CBO's 10-year projection of $89 trillion being spent, $22 trillion of projected deficit over the next 10 years. That's a $2.2 trillion deficit per year, completely unsustainable, not even coming close to returning to a reasonable pre-pandemic level of spending. So again, we're just not taking the time to actually debate this. And by the way, I heard earlier discussions of AI. I'm using AI. For example, this morning, again, using that basic CBO projection, 1.8% growth is what they're projecting, 2% inflation. I said, well, what if we grow at 3% with 2% inflation? What's that going to do in terms of revenue? Over 10 years, about $500 billion. We lose revenue the first 4 years during the Trump administration, probably gain revenue in the last 6 years. So again, that's the kind of analysis I'm doing. That's what I want to put into a report I want to issue here within a week or so. Just laying out the basic numbers, which we have not looked at. We haven't looked at the most relevant piece of information. The fact that our deficit is out of control, it's on an upward trajectory, when what we should be doing is bending the curve of the deficits down in this reconciliation process. We're not even coming close.
Senator, during President Trump's first term, before COVID, we were under $1 trillion. And that's still a lot in the deficit. And then the pandemic hit. Now suddenly we're at $2 trillion. We just seem to be locked in there. I know that there's some, there's interest and there's other factors that are going against this. But your idea to get back to pre-pandemic spending levels, I wish you could just flip a switch, but you can't. And every single thing that you take away, there's going to be some constituency that it's going to be the end of the world, or that's what they're going to say. What would it entail to get back to pre-pandemic spending levels? Where are those cuts?
So again, let's look at the numbers. 2019, we spent $4.4 trillion. This year, over 7. Next year, projected to be about $7.3 trillion. So again, that's a massive 58% increase in just 6 years. So rather than basically leave most programs untouched, only focus on a couple, you need to go line by line, program by program. And I have to believe in $7,000 billion worth of spending, $7 trillion. You will literally find hundreds of billions of dollars that if you don't spend it, nobody would even notice except the grifters who are sucking down the waste and the pork. But you have to do the work. That's going to take time. It's going to be a massive effort. We haven't done the work. We haven't taken the time. But again, in proof is I've laid out these options for pre-pandemic spending going back to Clinton, Obama, and Trump, 1998, 2014, 2019. You grow all outlays except for Social Security, Medicare, and interest. Leave those as is, and then grow all of their outlays by population growth and inflation. You end up with a baseline budget somewhere between $5.5 and $6.5 trillion. That's where you start. But you have to do the work, you have to do the analysis. I know the numbers. I've been forcing the numbers on my colleagues in the Senate. We're going to look at the numbers.
Senator, you said you're using AI to kind of run through some different scenarios. That's interesting because that's sort of what Jamie Dimon was suggesting the government do last week when he was speaking at the Reagan Library, except for he was suggesting that you stress test it for much worse times, kind of like the banks have to do these stress tests. Did you stress test it to find out if GDP dropped to 1% or if it dropped to negative levels, what that would mean?
I could literally do that in about 10 minutes. So yeah, that's what I want to lay out in my report. We'll stress test it. I just did the first one on the rosy scenario, 3% growth, which we haven't achieved. By the way, the last 20 years, we've averaged 2% growth. So Reinhardt and Rogoff talked about in their book, this time it's not different, or whatever the title was. Once you hit 80% of GDP of debt held by the public, you harm economic growth. We may be at that point right now. We're way beyond 8% or 80%. So again, we have to look at this, and my latest chart just shows what you said, Joe. Obama, his last term, he averaged deficits of $550 billion. Trump's first 3 years, $810 billion. Then, of course, he had COVID, $3.1 trillion. Reasonable leadership would have brought it back down to under $1 trillion. Joe Biden averaged deficits of $1.9 trillion, and that's where it starts. We're going to have a $1.9 trillion deficit rising to about 2.5 over the next 10 years. Again, it's completely unsustainable. This is insane what we're doing. No American family, if they had an illness, had to borrow $50,000 to pay for medical bills. If that family member got well, would keep borrowing $50,000 and spend at that level. That's what the federal government has done. It's completely unjustified, but we need the time to do the work. And I'm sorry, the one big beautiful bill, we haven't taken the time.
So, Senator, it's been said that if there was like a fairly small bill that just extended the 2017 tax cuts, do you think you could get both sides? You got people in the Senate, there's some like you, there's others that have a totally different situation with the states that they represent. Same within the House. So you can see the Freedom Caucus, and then you see, on the other side, it's impossible to please everyone all the time. That's why this isn't going to get done. I guess that's your point. It's not going to get done in one big bill, right? If you try and throw everything in there, what would it look like? Where would you do President Trump's tax on tips and on overtime, and which part of the bill would that be in? How would you split it up?
So I would focus on the areas of greatest agreement, supplying, funding to the border and border security. Defense, I guess we have to do that. I would take whatever spending cuts, and the House done pretty good work on their limited number of spending cuts. I'd bank those. I would extend current tax law, take an automatic tax increase off the table. I would extend the debt ceiling for a year, and I'd leave everything else for a second bite at the apple here, where there's the pressure to do it. We can't do this in one bite of the apple. It's
and you can do both with reconciliation.
Right.
You can do both. You can do it twice.
Absolutely. We've got fiscal year 2025. That's what this reconciliation bill is. We should be debating a 2026 budget right now, so we've got that reconciliation. You can do 3 bills in each reconciliation package. We're bundling up just one bill in this reconciliation. So we have all kinds of bites of the apple. We should use that. And President Trump has to realize the debt ceiling is leverage for him to accomplish what he said he wanted to accomplish in the State of the Union, balance the federal budget. We're not even coming close. We're not even turning the deficit trajectory downward. Is skyrocketing.
Senator Johnson, you're often mentioned in the same breath with Senator Rand Paul. He agrees with you on a lot of these different issues. We had him on the program yesterday, and last night he put something out on X in response to Elon Musk's statement on this. Elon had tweeted or had put on X, "I'm sorry, but I just can't stand it anymore. This massive, outrageous, pork-filled congressional spending bill is a disgusting abomination." Rand Paul put up this tweet. He said, "I agree with Elon. We have both seen the massive waste in government spending. We know another $5 trillion in debt is a huge mistake." Do you agree with Rand Paul on this?
Well, again, I'm going to be focusing on the numbers. Use CBO's 10-year base as our baseline, their projection is a baseline. And then let's start honestly discussing where we're at. And again, my latest chart just shows the unsustainable nature of this, how deficits are going to continue to skyrocket. We're not even coming close to even having a possibility of balancing the budget. So I'm going to focus on the numbers. I'm not going to be insulting anybody.
Does what Elon said give you additional kind of help in your quest on this?
Yeah, it certainly bolsters our case. He was in the inside. He showed us with President Trump how to do this. Contract by contract, line by line. We have to do that forensic audit. We don't take the time. Again, we exempt most programs, focus on a couple, tweak and get a CBO score. That's really out of context. I mean, the context is all about $22 trillion in expected deficit. By the way, that counts about $4 trillion in tax increase, which I don't want to incur. But if we don't incur that, you got to make up for about $4 trillion in revenue. How do you do that? That's why I'm starting to do these AI sensitivity analysis. And by the way, mindful that AI is often confidently wrong. You got to check your work. So I haven't checked this work, but again, that's how you approach this. You actually look at the numbers, Take the personalities out of it, take the invective out of it, take the insults out of it, look at the cold, hard facts. If you do that, you get depressed really fast, and hopefully it'll cause all of us to act. This is our one chance. This is our once-in-a-lifetime opportunity to reset government spending at a reasonable pre-pandemic level. We can't blow it. We can't count on winning another election, having another shot in 2027. This is our time. We have to take this seriously.
So let's say that, you stick to your guns here, but at this point, if I characterize what you want to do as a long shot, is that overstating it? I mean, I can see Senator Thune, Majority Leader Thune. It's not a long shot.
No, it's not a long shot because we have enough of us who are going to say no. Listen, we all support the president. We want to see him succeed. Yes, we want to see him succeed. Yeah, we want, but again, my loyalty is to our kids and grandkids. We're mortgaged their future. So there's enough of us who have that attitude that very, very respectfully, we just have to say, Mr. President, I'm sorry. One big beautiful bill was not the best idea. We should have done what John Thune always wanted to do, split this up into multiple parts. I always said 3 parts. He said 2. Time's crunch. Now it's back down to 2 parts. Uses of 2 budget reconciliations, but you need to keep enough on the table to force us to come back here and do the work, take the time to actually reduce spending to a reasonable level.
I mean, the Senate is going to look at the House version, and the Senate's going to do its own version. It just seems like it's in motion already. And
well, again,
go ahead.
So the president, Senate leadership has to understand that we're serious. They all say, "Oh, we can pressure these guys." No, you can't. Okay, again, we're being very respectful. I ran in 2010 as part of the Tea Party movement. We were mortgaging our children's future. We were $14 trillion in debt then. Now we're over $37 trillion. We're serious about this. They need to take us seriously. Don't insult us. Work with us. Lay out the numbers. If you can say that our numbers are wrong, fine. Let's work through it. But again, every analysis I have, there's greater upside risk to that deficit. Interest rates are moving up. If we go increase interest rates 1%, that's another $4 trillion over 10 years in terms of deficit. If we don't replace the $4 trillion, that's $4 trillion of lost revenue. Again, and growing the economy 3%, it adds to it a little bit, but mostly in the out years. So again, come to the table, let's look at the numbers. If I'm wrong, prove that I'm wrong, but let's do it with respect, but mainly respect for our children and grandchildren. This is immoral, what us old farts are doing to our young people. This is grotesque what we're doing. We need to own up to that. This is our moment. I can't accept this scenario. I can't accept it, so I won't vote for it unless we are serious about fixing it.
And who do you think, okay, Rand Paul, you, that it would still pass. Who else are you talking, Mike Lee? Who else are you talking about, Senator?
Again, I don't want to speak for others, but yeah,
For
Mike Lee,
Gang of
Rick
Five,
Scott, we've been. I think there are a lot of people that aren't as vocal as we are that support what we're doing. And again, they can't dispute the numbers. Again, we didn't talk about numbers in the House process. If the White House just comes and starts insulting us, I'm sorry, I got the numbers to back myself up. Again, if my numbers are wrong, fine, prove me wrong. But I think I have the numbers, which is, I think, one of the reasons they probably won't insult me, and that's good.
Let's say we don't split it, and it's going to still be one big bill. What could the Senate put in the bill? There's nothing that can be done.
It won't pass.
And there's nothing.
Not in such a short period. Not in such a short period of time. Maybe we can make a couple tweaks.
Yeah. So if it were something with I know Medicaid, you think we're missing the opportunity to reform that as well. But if
Joe, we need to eliminate the Obamacare portion of Medicaid, which puts at risk the Medicaid for vulnerable children. Again, we didn't have time to make that argument, so we just get attacked and we cower in our little corners. No, Obamacare is grotesque what it's doing in terms of risking the Medicaid for the vulnerable. For every dollar the federal government spends on traditional Medicaid for a disabled child, the states spend on that, the federal government kicks in $1.33. For every dollar the states spend on a single able-bodied working-age childless adult, the federal government kicks in $9, which has allowed the states to game the system and basically legally steal from the federal government and federal taxpayers. So we need to make those arguments. They're not necessarily easy to make, but it is grotesque what Obamacare has done to Medicaid.
The downside, I guess, and the journal kind of, and the journal points out, Elon, make me chase, just don't touch my subsidies. But they're saying that really he's joining the rest of the naysayers to try to sink the big beautiful bill, which really doesn't. If that were to happen without something else happening, you would admit you wouldn't get the 1.5 trillion in cost cut. You wouldn't get the extension of the Trump tax cuts. The alternative, if you get nothing, is pretty bad. And
getting nothing is not acceptable. It's not acceptable. Again, it was just the wrong strategy to try and bundle it all to one big, complicated, difficult to pass bill. Focus on the areas of agreement. Do that now. Literally, I think we could get that done by July 4th. Focus on that. Again, take an automatic tax increase off the table, extend the debt ceiling into next year to keep pressure on the process. I mean, the president has to understand the debt ceiling gives him leverage to do what he said he wanted to do, balance the budget. Leave that out there. We're not going to default on our debt. We'll never default on our debt. We have more than enough revenue coming in to service our debt. We'll never default. This shouldn't freak anybody out. This is the scaremongering of the big spenders. So again, let's focus on reality. Let's discuss the numbers, and let's focus on our children and grandchildren whose futures are being mortgaged. Their prospects are being diminished by what we are doing to them and the fact that we're ignoring it. We're just simply ignoring it based on rhetoric and slogans. I'm interested in reality and substance.
I want to know what happens over the next couple of hours. You got your phone on mute right now? I don't. You may be getting. I don't know. Where will the calls be coming from after this interview? You think, Senator?
Well, we're going to be meeting with the president in the White House, the Senate Finance Committee, so I'll be in that meeting. I've had a very nice conversation with him on Monday. So again, I support him. I want to see him succeed.
Yeah. I know, we all do. We all do, and I mean, a lot of people are nodding, but it seems like the train may have already left the station in the view of Speaker Johnson and Majority Leader Thune and the president himself. No?
No, they always told me that ship has sailed. I said, we'll call it back to port. Because the ship that the one big beautiful bill's on, that's the Titanic that's going down.
Toothpaste in a tube, no way. Humpty Dumpty, Can't unscramble on that. I mean, I have a lot of expressions for you. Oh, wow.
You can bring it back. You can call it back to port.
Get the horse back in the barn. Doable. Okay, you can do that. Come here, Flicka. Okay, very good. Senator, thanks for all your time this morning, and very interesting, and we'll be right back with more. Thank you.
up, Gilman Hill's Jenny Harrington will help us find an opportunity in a market where she doesn't see big upside or big downside. That's next. Squawk Box will be right back.
And sweats.
Let's talk markets and some stocks to watch with Jenny Harrington, CEO and portfolio manager at Gilman Hill Asset Management, as well as a CNBC contributor, author of a new book, Dividend Investing, Dependable Income to Navigate All Market Environments. I was going to ask you about the overall snapback in the S&P. Do we go to new highs? Doesn't this market seem like it wants to go up? And but everybody's looking for a possible test of the recent lows. Sounds just like 2023 and 2022 is what it sounds like to me.
You know,
You're going to hide behind individual stocks. That's what I would do if I were you.
I think
Do you have an overall market outlook?
Well, I always do.
Yeah.
But you need to consider the source, right? I'm
Yeah.
a dividend income manager. I'm always going to be apprehensive and cynical, which is why I like buying dividend stocks. So I'm always apprehensive. I'm always cynical. I'm also always all invested. But right now, you know, yesterday I spent the day at NAREIT, the National Association of Real Estate Investment Trust Conference.
Yep.
And even within that, you're looking at like the healthcare REITs. And you don't want to buy all the healthcare REITs. You want to buy two.
Some of them.
You know, within the semis, you don't want to buy all the semis. You want to buy one or two. So you're right. I am hiding behind individual stocks, and I don't know if it's hiding behind or it's just things are changing and it's the time for active management. But when you ask me about my overall view on the market, I don't really see how we go up much more from here, and that doesn't mean I'm wildly bullish. But I listened. Oh yeah, sorry, bearish. Thanks. I always say the wrong thing.
Yeah.
But I was listening to your interview with Nick Timrose. How many times did he say, I don't know. We don't know. There's no way to tell.
Is it ever not like that, or is it worse now?
I feel like it's a little,
The
I don't know if the right word is worse, but it's more I don't know right now. And then Dr. Richardson, who you had on before, you know, hiring starting to show cracks. When you have those, how do you get past a 21, 22 times multiple? I don't know.
We're already, for a while, it looked pretty good. What did we get down to? 20 or 19?
19-ish, yeah.
Yeah.
Maybe even 18 and change. So that's when I start to feel good, when the multiple's great. But then on the flip side, I don't really see what derails it. You know, I think earnings were good. Companies are doing well. The consumer is continuing to spend. So I don't see this nasty bear case.
Is this number that we're looking at, though, does that assume that the tariffs are going to be taken down substantially? That there will be agreements that are...
Are we de-escalating?
Are we inured? Are we inured? And we're just saying, who knows?
Assuming that these, you know, the next 90 days doesn't come and you're dealing with 145%.
Yeah, I think it has to assume that it's nothing near the worst case scenario.
Right.
And it shouldn't be. That doesn't make any economic sense. It doesn't make any logical sense. Nobody wins. When I was in business school, we took this negotiations class, and they would talk about BATNA. It's a goofy thing. It's a better alternative to a negotiated agreement. But it basically makes you think about both sides and where both sides are coming from and what's the best outcome for both sides. The best outcome for both sides is not 50% and 145% tariffs.
What are you buying today?
Okay, I'll give you a couple ones. I really love Ryman Hospitality Properties. It's got a 4.5% yield, trades at about 13 times earnings. There's no tariff consequence. If a terrible recession were triggered, they're still fine. They own non-gaming conference centers and resorts, totally domestic. I like that.
All right, RHP.
Yeah. Another one, this is kind of funky. It's in our international strategy, but it's KB Bank. KB Bank is like the JP Morgan of South Korea. Trades at 6 times earnings, has a 5% yield. That economy is booming. You know, I think you can buy these. And by the way, there's no tariff exposure there either because it's all focused in Korea. So yeah, so I like things that are out of the limelight. I like things where if we are in kind of a low return environment, that big dividend yield gives you at least some part of the return being very, very highly certain.
And it might be supportive as well. We would have gotten 3, but
I can go all day. You want like 30?
Yeah, no, we'll do that. We'll do that next time we come back. But we've got to be out of here in about 20 seconds, I think. But Jenny, thank you.
Thanks for having me.
Good to see you. Let's take a very quick look. Actually, markets are back in the green, barely. Dow futures up by about 6 points. S&P futures up by 3. The NASDAQ up by 11. We do have that big jobs report on Friday, and after the ADP numbers today, we'll be watching ever so closely.
Might not be so big after the ADP.
We shall see. Anyway, we'll be right back here tomorrow. Join us then. Right now, it's time for Squawk on the Street.
Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. We've lost some of the pre-market gain as ADP employment comes in the weakest in 2 years. Smaller businesses cutting jobs on a net basis. Plenty of data on deck today as those aluminum and steel tariffs kick in. Our roadmap begins with a stalemate in trade talks. The president says that Xi is, quote, extremely hard to make a deal with. Elon Musk blasting that tax bill, calling it a, quote, disgusting abomination. We'll talk about the fallout. And a big milestone for Wells Fargo. The Fed finally lifting the asset cap. Charlie Sharp is with us here at Post 9 exclusively in a few moments to talk about what it means for the company's growth. Let's begin, though, with trade tensions between the United States and China. Overnight, the president posted on Truth Social, quote, I like President Xi of China, always have and always will, but he is very tough and extremely hard to make a deal with. We still, Jim, don't have confirmation from the Chinese side that they will talk on Friday.
Right, and without a call, you run the risk of saying, okay, we thought it might be the weekend, we thought it might be Wednesday, we don't know if it's going to be Friday. It's hanging over us. Also, is this story that we keep hearing about the magnets, including an incredible thing about the idea in the journal that maybe we have to go back and make motors there. It is a level of hardball that I think really tests Trump. I think he likes it. I think he likes it, and I think that this is the sign that he does like it, because he would keep quiet if he didn't feel like this wasn't the kind of negotiation that he used to make with banks. And I think, I'm not saying Xi met his match, because Xi can take an incredible amount of pain because he lives in a totalitarian environment. But this will be incredibly interesting, and it's the rare earth versus some of these plastics. It's the idea of who's hostage versus the idea that Trump wants to embargo them. I think he wants to put it's embargo versus we need these certain products. I think it's going to be exciting. I think the market's going to hate it because I think it's going to be up and down. We're going to come every day, and there's going to be a Truth Social, and we're going to be so destabilized. Look, people feel that the ADP is what knocked us down. I also think the idea that posting knocked us down.
Sure. Big piece in the Times on page 1, looking at jet engines, for example. You can't make it without China.
No.
The industry actually put a letter out yesterday talking about components for aircraft and defense. They rely heavily on the materials you're talking about, Jim, but we're 3% from all-time highs.
I know. Well, Kelly Ortberg would tell you, the CEO of Boeing, that they need the planes more than anyone else in the world. The Chinese have travel problems. They can't go where they want to go, and that's a chip. I mean, everything's a chip. When you read Dollar Tree's earnings, I mean, that place is just one big chip. I mean, they need their stuff. Now, of course, obviously, you don't have to go to Dollar Tree. You can go to Costco. But I just think everything's on the line because it turns out that now we've had a lot of quarters, and boy, there's a huge amount of China at every company I've dealt with.
Sure, yeah.
Just everywhere.
Yeah. There's a piece on the tape this morning that China's weighing buying hundreds of airplanes from Airbus, and that Macron may go to China in July to celebrate 50 years of diplomatic relations.
As Airbus can tell you, they have fewer planes than Boeing. There's nothing. That's just a bluff. That's a plain out bluff.
I mean, it's call it a bluff if you like.
Right. But I mean, if that was on the phone call with his buddy pal friend Xi, I think that Trump would say, look, there's no real need to talk. That's what you're going to come at me with. Now, Macron going there 50 years, that does sound like an embargo is not going to work. Europe likes China. They need that market. I think we're very much alone when it comes to what we want to do. Maybe Korea, maybe Japan.
Right.
That's historical.
Meantime, Jim, you're right. We're dealing with the China side. Meanwhile, the EU rep this morning says the steel tariffs were a surprise. It does make talks more difficult. They told that to Greer in Paris. And with this FT piece, it's going to be tough talks on trade, tough talks on NATO, tough talks on Ukraine, which the Times today argues Europe's more convinced they can handle that by themselves if they have to.
The amount of money they're spending on NATO is driving their entire stock market up. I mean, I go in this morning at 3:30, and there's it's looking like Germany's going to be up, and then it follows. Oh my gosh, then it blasts up. And it's
Poland's up 40% for the year.
Poland's fabulous. It's a Poland spring over there. Man. I've got to tell you that this European market, and now David's not going to make fun of me because David's not here, but the Spanish market is so great. You know, people are scrambling to find stocks. You just have to buy the VGK. There's just not enough stocks. At Rhine Metal, I mean, there's a couple of German stocks that are up like 200%, but they've changed. They've gotten a level of religion about spending that's just incredible. I think a lot of it's NATO. They know the consequences of a Russian win. Poland certainly knows the consequences of a Russian win. How do we know that Poland doesn't have ambition? I mean, Russia doesn't have ambitions for Poland. We don't know. We don't know. Okay, it's democracy, it's NATO, but look, there's just the history of Russia is to say that Poland doesn't exist. Why would Putin disagree with the history of Russia?
A lot of game theory about what his ambitions may be beyond Ukraine. You're absolutely right. Meanwhile, Wells Fargo, big story today up in the pre-market. The Fed has finally lifted that nearly $2 trillion asset cap on the bank. It was imposed 7 years ago in response to the company's fake account scandal. Removal of the cap does end the limits on the company's growth, and we're going to talk to Charlie Scharf in a few moments, Jim, about what areas they're excited about growing in.
I think this is so exciting. This is the third largest bank. Charlie Scharf has tremendous ambitions. He has been just crimped like you wouldn't believe. I mean, these banks, before this cap, these banks were all kind of clustered. Since this cap, oh my, Wells has fallen so far behind. Plus, they spent a fortune on regulation, on compliance. I just have to tell you, I think this is a watershed moment. Now you can say, well, like some of the analysts who are short-sighted, well, that's why it's going up. And no, I mean, it'd be a fundamental change. I think Charlie is going to go for J.P. Morgan, where he worked. Worked for a long time.
On the
Worked from
commercial
2004 to
banking
2012.
side, on the credit card side.
Commercial credit card. Now, remember, he had to cut back on corporate because that's how he kept it within the cap, and he went with the much, I'd say, sticky retail. But look, Charlie is I find him to be one of the most competitive people I have ever met. You've got to put him in a camp which just says, I've been waiting to take this bank and turbocharge it, and all that's happened is I've been playing with shackles. The shackles are off, and this Prometheus is unbound.
Meanwhile, we've gotten some updates in the last couple of weeks about, say, the amount of headcount reduction they've done since 19, when Charlie came along.
No, Charlie has been, I think people don't realize he's better at tech than people did. Remember, he went to Visa, that was a tech place. Back in New York was a tech place, but they were blocked on acquisitions. They had a regulatory shadow where you could not get, so there's a lot of people who wouldn't deal with it. He has said this is not like turning on a light switch, but at the same time, this is going to be a bank that if I were Jamie, of course, Jamie's up there with Jensen. It's kind of annoying after a while. If I were Jamie, I would say, you know what? I totally dismiss him, even though he was the head of consumer from 2004 to 2012, and his dismissal amounts to saying to everybody else, oh, I guess he's gunning for us. That's kind of dismissal.
When we come back, a rare interview exclusive with Wells Fargo's Charlie Scharf right here at Post 9. Don't go away.
Carl, now this is exciting. We got the Federal Reserve lifting Wells Fargo's $2 trillion asset cap. Of course, that's penalty resulting from the bank's fake account scandal that had nothing to do with the man to my left. Let it get clear, 2019 versus previous. Wells Fargo calling it a pivotal milestone. Joining us exclusively here at Post 9, Wells Fargo CEO Charlie Scharf. Charlie, first, I'm going to wish you congratulations.
Thank you very much. I appreciate it. But please wish everyone at Wells Fargo congratulations, because this really was a whole team effort.
Because you gave them all $2,000.
We did. We gave an equity award to every employee in the company, whether you're a teller, you're an operations person, trader, bank, or whatever. And what we wanted to make sure people understood is that they all had something to do with it. We wanted them to be thinking about the company going forward and hopefully sharing the upside. But it really was a team effort, and there's no better way to show that to people.
A lot of people have asked me during this period, like, what was happening and what's different now that the cap is off?
Well, honestly, yesterday versus today, the only thing that's different is the perception of Wells Fargo, which is incredibly important because we've always been perceived as being in the penalty box, being behind the eight ball in terms of what we can do. And until our regulators actually did the work and said they are a different company, it's just me talking, and that means far less than they do. But the reality is, going forward, as time evolves and as the world evolves, we have the opportunity to expand in ways, in a very methodical way, built on the processes that we built, but think about ideas and expand in ways that we wouldn't have been able to do it when the cap still existed.
Well, let's go there. What was the effect of not being able to grow versus the 2018 deposits when it was $1.4 trillion for JP Morgan and you were 1.2? I think there's a disparity. And what does that disparity mean for you now?
Well, listen, and I want to be really clear, which is when we look back at what happened, the things that we did were very wrong, and we can argue about how long it took, but things had to get fixed. So I'm not going to be complaining about what the impact was. But when you look back over a period of time, people have done different estimates. I think there's an estimate in the Journal today where they think that we probably turned away $400 billion in deposits over this time period, just based on market growth. And based upon the things that we've seen, we would agree with something like that, let alone if we were able to invest and try and actually take some share from some of the others, like some of our competitors have done. That number could even have been higher. And it's not just the deposits. Once you have the deposits, it's the ability to provide advice, provide investment services. If it's a corporate, it's the ability to help them access public markets. It really is relationship-based in terms of how you think about deposits. Hugely significant, and now we have the ability to compete differently going forward.
Do you think it was punitive beyond the actual reason for the penalty back then?
I think that when you look at what the regulators said we did wrong, no question they were right. It's always hard to, listen, I wasn't there, it's always hard to look back and say, does the punishment fit the crime? But there's no doubt that significant action needed to be taken because of the things that we had done and the fact that we weren't making the kind of progress that we're expected to make. So the reality is the regulators have been extremely tough on us, extremely direct, and I think appropriately so. I really have no issue with that. And when we look at what's been accomplished, it wouldn't have been accomplished if they hadn't given us the orders, if they hadn't been tough on us, if they hadn't forced the management and board changes that they forced, quite frankly. And so all those things come together to create a sense of urgency, the license to bring in a new team and to focus on these things in a very different way. Was the exact punishment, was the asset cap the right answer, or could it have been something else? It doesn't matter at this point.
What are you going to do with all the people who were involved in compliance? What are you going to do with the money you'll save compliance? Please do not answer that nothing will change, because that would be ridiculous.
No, I think, but it is important to understand we built a lot of things that didn't exist. So a lot of the disciplines that are embedded in the company have to continue, and we're completely committed to making sure that happens. That is what running the company with the appropriate risks mindset means. That's what I mean when I say building on the processes and culture that we built. But the fact is, these have been a bunch of big projects to get a lot of work done. We've had a lot of people, a lot of outside resources dedicated to that. And when we put together, the work from, these 14 consent orders, it's not always done as efficiently as you can because time matters. So we do have the opportunity over a period of time to be more efficient in how we do it. And quite frankly, it'll make it actually better controlled because we're thinking about it now holistically with the right kind of foundation. So yeah, there are efficiencies to come. We have lots of opportunities to become more efficient away from this work. So all in due time.
All right, so Charlie, you came in 2019. How many consent decrees did you think you needed when you took over?
Well, I knew the number of consent orders that were public. I knew what was required by reading the orders. What I didn't know is where we stood on all of that work. And yeah, I was very surprised at the fact that we hadn't made more progress on that work, that we didn't have all the right disciplines in place. I've talked about the fact that I think one of the most important things I've done, in addition to bringing in people that could actually get this work done, to complement the people that were there, was making clear it's our top priority. So when we think about what was surprising, the numbers of orders weren't surprising, but where we were and how much work was still in front of us, I expected it to be a lot, but no question more than I would have expected.
You mentioned the perception of Wells changing today.
Yeah.
Is it the kind of environment where you can afford to come out sort of guns blazing on growth? Or do you still need to be sensitive to those who maybe wish the asset cap would last?
Well, I think about in terms of what the right thing to do is for the company and for our shareholders and our communities, which is, first of all, this is not the kind of environment where you're going to go out guns blazing on anything. I think about it in terms of what are the business opportunities and what's the smart way to go about growing. And so what I said is there's no light switch that's going to go off today versus yesterday.
I'm here.
We look at things in terms of our opportunities are much more linear in terms of how we'll grow and our level of aggressiveness as opposed to exponential. But remember, yesterday that was a line that was flat. We weren't able to actually grow linearly, and now we can. So the other thing which I think people don't totally appreciate is the amount of effort that the management teams put into this. This took up huge amounts of our time. I've said publicly that I probably spend 2/3 of my time doing this work, appropriately so, by the way, because it is the most important thing. But as we complete the work, as we get these things behind us, embedding it in the culture and continuing it requires a different level of work, not just for me, but the management team. And so that means we can focus on doing more to help customers, growing, and figuring out where the world is going and how we're going to participate in that.
Now, Charlie, I know you as a pretty competitive guy, but you've been playing with one hand tied behind your back. I call you Prometheus, and you are now unbound. You fell quite behind in terms of deposits to JP Morgan. You worked at JP Morgan. Wouldn't it be great to take on JP Morgan in every single element and start winning?
Listen, I've got a huge amount of respect for them, Bank of America, Morgan Stanley, Goldman, Citi, all the people differentiated consumer and business franchises in the U.S. When you look at the scale that we have, when we look at the quality of the brand, even after all that we've been through, our ability to invest, the depth that we can go down in terms of the offering amongst a broad set of consumers and businesses, the way we can cut across the different product set, really hard for a lot of people to compete with us, but we welcome the competition. But we believe that ultimately what's going to help us be successful is that we can create more value for our customers than other people we compete with. And so do I want to be better than all those people? Absolutely. But listen, they've been at this for 10 or 15 years. They've done a great job. There's plenty of opportunity for all of us to actually do a better job for our customers. And yes, we do want to take share, but there's no one person we're targeting. But to your point, I do want people to look back at the end of my tenure and say, we didn't just fix the place. We didn't just get the consent orders behind us and get rid of the asset cap, but look at, that is an amazing company that I want to do business with, and you see it in our market shares, you see it in our profitability, you see it in terms of our growth, and that's what's the opportunity for us, and we believe
Okay, I'm here.
It's up to us to deliver, but absolutely this franchise is capable of it.
Who's this guy talking about? Wells Fargo wagon.
Getting some incredible talent from other
Had some
particularly people who were not able to become CEOs.
good things happen to it.
In the way of them. Talk to me about
We hit
this
resistance.
team that you have, because these are all name brand people.
Good morning, franchise studio.
RTP,
Options King, Michelle, Magnificent, Jesse, Angel, and Funk.
Having the right team in place. Like, people talk about me, I've read a lot of things about me. It's not about me. Again, the most important thing that I've done is bring in those people.
Let me think here. I'll wait until I get more people in the room. if anybody posts a trade idea or something, kind of post a chart or while you're taking the trade, if it's like close to a moving average or if it's a setup or kind of like what I do when I'm talking about them. So, oh, this pulled back to 3 black crows. If we get a hammer or we get a doji, we might be in play, or we pull back and hit the 200 EMA here or the SMA, and we bounce to one of my zones. Yesterday I took a trade. I played a trade where I thought we were going to not break the megaphone, so I bought a put, and it ended up breaking the megaphone, and then we had one hell of a run. Usually they like to pull back once they get to that resistance, but this one kind of consolidated, and then boom! Yeah, I found $20 this morning in the IRS. And I was talking yesterday about I always went out of my way. If I didn't have something to do, I'd go find something to do. Or always kind of worked above other people that I worked around. Well, this morning I'm sitting there, nothing to do, so I go out and I get my broom and I go out and sweep the parking lot. And there were some leaves up on the curb, so I went over to pick these leaves up and go throw them in the trash can, and I found a $20 bill. If I'd have never took that initiative and walked out there and cleaned them leaves up, I would have never found that $20 bill. So you'd be surprised what happens to you when you go that extra effort. What's that?
Did that $20 make you holla?
Yeah, it made me holla. I found 60 in a Walmart parking lot, and I found 200 one time just looking down inside of a trash can. I said, what the heck is that? Pulled it out, it was 2 $100 bills.
Look at your 5-minute on ES before the market opens.
Whoop, that ain't that. Oh yeah, right at the, yep.
Squeezing hard between that 200 and that 63.
Yep. And sitting above the 21. The body is.
Yeah.
It's like we had a sharp pullback for some reason.
Yeah, I took the RSI all the way down to like 18 or something. It was crazy. 22.
Where's my water? Make sure I'm hydrated. I had real bad constipation, so I took a nap after I left here, and then I went and bought me some prune juice and did a job. And I felt a lot better. I might start drinking like I used to. I used to drink a shot of prune juice in the morning. Might go back to doing that. I mean, I felt miserable yesterday. Is that too much information, Michelle?
I ate a lot of watermelon, which is loaded with fiber, so
Yep.
especially in the summer. So yes, studio, if it does pull back any from the start. If it hits that 59.75 zone that I've got marked out as a strong pre-market support, then yeah.
SPY had a nice little chart this morning on the double bottom on the 5 minute. That's what I like to see right there. If I'd have took that trade this morning if it was day hours with that hammer, 2 big engulfing candles.
When are we going to get the trade 24/7? Ain't it coming up soon?
Is that happening?
I think.
I don't know if that's.
Let me check that.
I don't know if that's a good idea, but.
Or 24/5. 24/7 is 24/5.
So try not to get it like what Funk said this morning. Try not to go into a trade blindly. Understand why you're taking the trade. That'll help you out tremendously.
Jump above 63.
Tesla's flat. Apple's up 62 cents. CRWD's down 36. 37.
Yeah, they had earnings yesterday.
Yeah, I don't think they appreciated it too well. Mister's down $5. Go ahead.
I think it's going to come up and try to retest this pre-market high of 59.96.75 on the S. It's double topped during the pre-market hours. Then you might get a slight pullback on it, unless it's just super bullish like it was yesterday.
God. We got a 1, 2, 3 also coming up at 59.95 on the ES 5 minute. We broke resistance on SPX, yesterday's high. On the 1 minute.
Remember yesterday when I called out the 6,000s and you kind of chuckled and they were 80 cents?
Yeah.
Today they're $7.
God. Man, the same.
That would have been a crazy play.
Mister. I'm going to set alert down at the bottom of that order, but I had 59.81 to break. That's at double top. See if we get it off the 9 today. Now, if you allow yourself enough patience, you'll find a setup sometime today.
RSI is way hot on the 1 and 2. If it hits that 59.96 level on the ES that I was talking about, I'm probably going to get into a put just for the pullback. Because that'll be a triple top.
Yes, I got it right here. Tweezer top right now on the 5 minute.
Oh, it is a tweezer top on the 5. Should have already been in one. Damn it.
I don't know. Everything looks like it's at a resistance, but jeez. I don't even have my platform up. Shit. So now you got to.
There's that BMI.
Yep, we just got a new high.
But I ain't going against that candle.
Right out of the gate. I'm going to put an alert above the VWAP on the SPY. $597.19. I'll make it 20. The options are probably high this morning. today's the 4th. Yeah, they're not too bad. If I can get that 6,000 to drop a couple bucks on the lotto. I'm already off to a good start, dang it.
Nice. It's already blown past the pre-market highs. Not worried about that anymore.
That's going to become your support.
What I'm looking at right now is for it to get into that 6,002 ES resistance zone that I have. Because then the 5-minute RSI is going to be oversold as well. And that's when I'll jump in because that'll be one of my A+ setups.
Yeah. Here we go. I'm going to raise my alert above the VWAP. The VWAP's kind of cruised up above it a little bit. We pulled back to that support level, the resistance on the SPY, 597.64. Take off his watch. Somehow I got a little bit tight around my wrist.
Man, I want to get in at 59.40 here.
I'm going to wait a little longer.
That freaking tweezer top on the 5 is clean.
Clean?
Right off the orb. Yeah, it's right off the board, and it's a perfect butcher top.
Oh, for put?
Yeah, I think she's just gonna pull back to the 9 on the 2-minute. She could go by.
Okay, we're getting close to the VWAP here on SPY.
You're at the 9 on the 2-minute. Yes.
And them 6,000s are down to $6. That's what I'm looking at. It's a 6,000 one. On SPX, it's $6. We still had a pretty good little run here.
As rich as you, so I'm looking at the 6,000 pins.
No, if we could, I think we can drop. I don't think. I mean, this is a spot. It's 6,010 will work. I'm going to give it a little bit more time. Damn it. There it goes. Right off the VWAP to SPY. It'd been $50 right there. $670 shit. Oh well. There was my setup. Dang, $100. So did y'all see how I noticed that trade there off the VWAP on the SPY? Missed that one. 7:30. That'd been my first trade of the day. So now we've got a triple top, double top, triple top with the VWAP bounce. So we're going to flag out here. Let me see here. Okay, we're retesting again. The other option is to take it here or wait, see if it doesn't hold the VWAP and take the 200. We were just triggered. So let me see here. Oh, this is at 540 now. Before it was at 6. So I'm going to wait for this here first Fibonacci level. And we got a yin yang off of the 200. Yin yang is a previous high. So these are at 540. There it is at 540. So that's the second time now off the VWAP. Practically an ascending well, no, it's not an ascending triangle. I never quite understand these flags right. Whoop. Dadgummit, there I go again. 540 to 640. $6.50. Well, got the little chitters today. The broadening out pattern back to the VWAP. A lot of undecisiveness going on here this morning. This is kind of a bull flag in a way. So we're back to the VWAP. Let's see what the slash ES is off the 9 on the 5 minute. Nothing else. We got the 21 on the 2. And we could pull back more on the 1 minute on the slash ES. We're squeezing between the 9, the 21 and the 9 right now. I'm going to wait. Go ahead.
If it touches ES 59.89, I'm buying longs. That is on the 2 minute, that is the 200, the 63, and the VWAP. That is freaking strong.
Yeah. 3 confirmations. And right now on the 5 minute, you're at support.
Set an alert for 59.89.25.
If we go below 59.92.89, you'll see your number, I think. I'm going to grab one here. SPX. The 6,000 at 570. Man, I still think that thing can come down. Let's just wait. I hate second guessing myself. There we go. Okay. 59.82. I'm going to jump in this thing. Or a little sooner. Right about now.
Yeah, it's just getting way back up hard.
$5.30. Okay, back to the top. And you got a 1, 2, 3 coming up. You're above the 9. I'm using, I used the SPX. What? Oh my God.
What the hell was that? Oh my God, I turned my head for 1 second.
Something came out. Global PMI came out.
Oh, PMI, yeah.
Well, shit. I wasn't paying attention.
I just turned around and grabbed the 60-10s at like 220. I didn't know what happened.
You grabbed him on the knife?
Yeah. $40-$50 a contract right now.
Yeah, I was in it. I'm about even right now.
That was a crazy knife.
I didn't think about pushing the trigger and buying another one. I should have. I was trying to figure out what the heck happened. It was at PMI.
When I saw it weak back up to the bottom of the orb, I saw strength.
Okay, we're at 570, so I'm not going to play around here. It looks good.
Yeah, I'm selling right here, $100 contract, so I went from 240 to 340.
Very good.
Now you're at major support on the yes. You're at the 63 and the 200 on the 2. And you're at the 200 and VWAP on the 1.
Looks like we can get down to the 200 on the SPX at 59.73.
That was a squeeze bottom there.
Yep.
And the 5 minutes holding the bottom of the orb, so. Where's your bottom on the 5?
Same way on the 1 minute. I'm going to have to add on to this one. 380.
They're going to push it into that 59.75 zone from pre-market. So just total, I'm going to add on as soon as it hits there. I mean, I'm already out. I'm going to buy a contract as soon as it hits that 59.75 zone on the S. It's been bouncing off there on pre-market all day.
Donald Trump post on Truth Social. ADP number out. Too late. Powell must now lower the rate.
Yeah, that's not what's doing this.
No.
They're drifting it into the zone from pre-market. I know, I can see it plain as day. Alright, I'm looking at the 6,000s. Another couple of points. Alright, setting a limit order for 255. There it is.
3 black crows. 2 sets of them.
In my zone. Now she's coming back out. Hell,
260.
come on, baby. Get up there. Don't make me a liar. Good girl.
At 530, 380, and 260.
Good girl. That's what I'm talking about. Very nice trade. I'm up $100 a contract.
Yep.
Very, very nice.
I got six contracts at 325, so I might just go back to.
Held. Alright, I'm getting out here. I'm up $150, $140 contract. But I'm gonna get out before we start testing the bottom of the orb.
Give it just one more. I want to see if we hit the 63.
Oh yeah, I mean you have to make up some. Mine was just pure profit because I freaking called it the damn absolute bottom.
Yep.
And we just hit the 200 on the 5 on the yes.
Okay, get ready to yank it. I say it's close enough to the 63 for me.
Yeah. You got a lot of resistance. You got VWAP, the orb,
390.
freaking 63 right here.
Yep, $4. 420 now. Right about now, 420. So that's almost $600 right there.
Swear to God, everybody better have made money on this trade. Could not have called the bottom any better. My man Studio took it. I know he listens. Randy's gonna be pissed if he didn't get in there. This dude took 100 contracts. Oh my God. Alright, you're taking me to the beach, Studio. Period.
That's right as a double bottom on the Fibonacci on the SPY. So look at this room. Look at my chart up there. You see where we had that day low? And I drew that Fibonacci. That's where I had 4 contracts. It was already on starting on its way up. I got it in right about in here.
Good trade, Jimmy. Good trade.
Yay.
I nailed the entry, you nailed the exit. That's how it works.
Yep.
It's so easy to see what the market makers are trying to do with this triple time frame and these zones. I knew they were going to push when it broke past the bottom of the orb and it broke past the 63 on the 200. I absolutely knew that they were going to push it into that pre-market level. Like I didn't have a doubt. Feel better now, Jimmy? You shook it off? You shook off the jitters?
Oh, yeah.
Mindset got back to that winning streak you're on?
Meta doesn't care about the PMI. It's making new highs.
These contracts are up $210 a piece.
There she goes. Well, I'd be making 90 more bucks a contract times 6.
540. So PMI dumped it, but it's going to remain bullish, huh? Okay. There's support right there. Damn. They're doing it again. unless the orb holds. Three black crows to the orb.
We're at the orb right now. Back to my 5981.42 on the SPX. That was at triple top. Back inside the expansion pattern. Under the 9, under the 50. Which I give more precedent to the 9, being above the 9, making it more bullish. Meta new highs. So we're back at my exit, almost 4:30. Damn, you look hot today, girl. Them bedroom eyes.
I mean, I don't really see any resistances. We're above all the moving averages on the 1, 2, and 5.
Yep, the only thing holding it's a 50. SMA.
EMA cloud is green on the 5, which I like.
That breaks a double top. There, it pulls back and hits the 9. The body.
Yeah. I just don't see anything that's going to hold it down.
$4. So here we are at the 9 right now. Come on, baby. Let's do it. $3.90. I got one at $3.90. The 6,000 strike. We got a pretty good wall, like you said.
I mean, you're at 63 on the 5 on the S right now.
Yeah. There's 3. God darn you. Don't do it. We're at the 63 right now on the 1 minute on the SPX. So let's see if it holds the orb. Yep.
Should have grabbed one when it hit the damn orb just now.
What was that? 440, baby. 450. There's your $60, unless we continue on up and hit the top. Now this is the triple top, so that's an exit idea. I'm going to hold on to it, see if we, as long as we stay above the 50. If they depreciate, so I'm going to get out of them. $470, $480, $470. Yeah.
You go to the top of the orb now.
Yep.
For resistance.
Well, at least up here to this here resistance line.
59.97.50 on the S.
Now, I'll scale out right here at 520.
Still got more.
Probably do. I'll leave one on here. I got 520 though. Can't complain about 130. Got one left. And I might just sell it too. We come back and hit the 9 or the third crow, finish the bottom right here on this fourth crow, and be support. If that holds, that'll be good. If not, yeah. $5.
None of your RSIs are high. There are no moving averages up here.
You see what I got out, don't you?
Show me. What'd you say?
I'm gonna show you.
Yeah, I see it on your screen now.
All that resistance line.
You were doing a trend line.
Yep. I mean, it can still break up to the upside. All it's got to do is consolidate. Once it hits that trend line, make a decision.
That right there should be a support line. There she goes. There she goes.
Hey, 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 there she goes. With all of her clothes.
I mean, the contract's at 550. I still see her trying to test the top of the orb. Price action isn't moving that much. Contracts are getting more expensive.
Yeah, 5:30. Today I'm going to have soup. Damn, Vegas says she can see 60-40 today.
Jesus.
I don't know about that. I'll be happy with 59, 90, 48. I'm hearing crickets. Magnificent's back. Everybody say hi to Magnificent. Oh, I didn't see the poll. I didn't see the poll. Bud, congratulations. Is he bragging on you? Man, I can't tell you how miserable I was yesterday. I don't think I've ever had that issue before. I really don't. Too much information, huh? Hope that ain't something serious. We got a megaphone stretching out. We can pull back and hit the 59.80. Oh, there it is. I was just getting ready to say it. Okay. $4.50. Okay, this is where I should add. I just got one contract. Now I'm at my even price here, so. Jenny, God, you gotta eat. How skinny that chick is. Girls like that scare me. Back in my day, all the chicks looked like that. Well, a little bit more meat on their bone, but Nicole, tell her to put on a little bit of muscle. Hey, don't she look nice today? Jenny? They both got black on. I don't know which one to choose. I'd have to pick, well, she's just beautiful. So are you, Rick. You're a lucky guy.
Here, this set of old highs and subsequent lows, and then coming back into prominence once again here. This area near 490, we bounced off of it. We had a
Spotify
recovery here, and we have now broken above those initial high points.
Okay, we're back at the 63
or so. Pushing into new intraday highs, on pace for a new closing high, breaking above that 700 level for now in intraday trading here. We can also see that RSI.
We're back at the 63 now. So if we stay bullish, this is where we need to hold because that's that yin yang, that triple top break. Boom. Pulled right back to it. So this is
60-15s at 135.
There you go. You see the pivot point off the 63. Now he's using that. Yeah.
So if you look at the 2 minute on the ES, you'll see a stronger confirmation. You see that the 63 and the 200 are exactly where it freaking bounced.
Yep.
That's the confirmation I was using.
Yep. Well.
Okay, then.
Now you got the 200.
Yeah, you're at the orb now.
So I'm going to grab one right here. Grab 3 at 340.
And I'm still even on the contract.
Huh. So I sold those at 520. I left one on the table at 390. And I got 3 at 340. So I have 4 now.
Been a lot of huge bottom wicks today that get followed up like quickly. If you look at the 9 o'clock candle and the freaking 908 candle and that last candle, those are huge bottom wicks that got bought up super fast. Somebody's trying to sell hard, but there's way too many buyers. While the contracts aren't losing a lot of value when it wicks down like that. You're at VWAP now on the ES.
Be right back. The one in the lobby I can't get into, and the one upstairs in the conference room they say is out. Okay, pulling back to the 200 now. So, we'll see if we hold the orb. And after this, I'm going to go get my lunch going. Today's soup. Soup and a burger. Eat the rest of that burger up. Should have waited for that orb to add on to my 4 or 3, I mean.
Has a ton of support, so I wouldn't worry too much.
Yeah. Back to my 340.
On the ES, you were sitting on VWAP, VWAP, the 200 SMA, and the orb all stacked on each other. It wasn't, I mean, it'd have to be ungodly selling pressure to push past all 3 of those.
Blanket. There we go. I'm green now. Let's get back up to that resistance line and maybe break. This will be number 4. Better just get out now and take my profit. 380.
At the top of that intraday resistance zone that I had marked.
Well, give me another boost. Just a little bit. This should be it. I should get out here, not be stupid. So Jimmy's out at 380.
There you go.
Because I'm hungry.
Green is green, man. That was the resistance. All right.
Is there any way to fix the 20-second delay on YouTube? I don't know. You can join the chat room.
That looks like a head and shoulders on the 1 minute.
Yep. Commerce Secretary testifies before Senate committee. Oh. How come I didn't know about the poll? Or PMI?
MA actually gave us a warning about PMI. I'll have to check out the chat more often during the day.
Yeah, I guess. I think I would have voted. I think I would have voted.
Orb.
Yeah.
On the ES, we're at the orb with the head and shoulders.
I would have voted down and up. Did you hear that magnificent? Wouldn't I have Angel? Where's my Francisca? Angel knows I would have. Okay. Today I will be having chicken soup, chicken barley soup, and I need to make some.
Double bottom right here.
I gotta run to the bank also.
There it was. Right off the double bottom.
And I got to make checks. I think I'm out of checks. I got to look tonight to see if I'm out of checks. Perfect. Tesla down $12. Flagging out.
My clothes getting beat. Good Lord. Down 6.5%.
I was informed that the SPX is bouncing off the 63 off the bottom of the orb on the 2 minute. And it's a pretty clean chart. The 2 minute is. And that is a Head and Shoulders, which was mentioned by Funky. So you have a bunch of confirmations. What'd you call me?
No, I had stuff all over my keyboard. I was trying to figure out what the hell it was. I
No.
thought it was a bug.
I thought you called me sweetheart.
Oh, yeah, absolutely. Golly, at the chart on that freaking NVTS. Damn.
We're squeezing.
Jesus.
We're squeezing right now. And I got 3 minutes to lunch. Higher lows, inverse Head and Shoulders, and we just thought, I thought we were getting ready to break out right here.
Yeah, I'm thinking about jumping into a 6,000.
Let's go, sending triangle. So you see that, YouTubers? We have inverse head and shoulders, and then we have an ascending triangle right here, almost a flag. And you can, when it starts to tighten up, you can tell it's getting ready to do something. You don't know. This is bullish look right now because you've got higher lows and you got the ascending triangle. Boom. One, two, three, four. There's your number 4 exit idea. Or we're going to run back up to the top of the orb. Beautiful. My darling, oh my darling.
Did you see that on your message center, Jim?
Oh my darling?
No. Did you see the message that just came up on message center in Schwab?
No.
New futures products are available to trade. 1 ounce gold and Solana.
Oh. Oh. Well. Thank you, Donald Trump. We are now at 440, the $6,000 strike. Are we going to get to 59.90, 48? That's the question. Alex, are you bad-mouthing Tesla?
62 vehicles. This after a 6% fall in April. And also, it's now its 8th straight month of sales declines for the China-made vehicles. Notably, though, China-made EV deliveries were up 5.5% from April. But really, this just is more evidence of, perhaps the EV market as a whole, slowing in some areas of the world. But more likely with these particular China-made.
I don't need the government to push EVs on me, period. Now, if you'd let the private sector do it, it would have worked out a lot better.
Offering smart assisted driving capability transfers to new vehicles in China through the end of June. So
try to tell that to a
these
socialist.
Competing on price are also offering more incentive to try to win this battle at the moment that is proven to be quite ugly when it comes to some of the numbers and the squeezing of the margins. You do see Tesla shares under pressure today, but as the market has extended its gains, Tesla has moved off its lows, but still down 3%. So still a pretty ugly day for Tesla.
Yeah, certainly, especially if you take it in the context of some of the recovery we've seen of late with regard to shares of Tesla. I saw that there was some weakness in Europe as well, but obviously that's a much smaller market compared to China. So what's at stake here, Alex?
Well, we know that Tesla is largely priced off of what it could be down the line, whether that's AI, autonomous driving, robo-taxis, some sort of energy technology that they create and break through. It's this kind of futuristic potential that drives the excitement of Tesla. That said, for them to potentially reach any of that potential, the core business has to continue to be an earning machine. And that's essentially what it has been after they turned the corner, however many years ago, becoming profitable, which is what many of its competitors have still failed to do when it comes to even legacy, automakers and their EV divisions or just pure play EVs. So they don't want to see this trend continue to accelerate in terms of less and less deliveries or sales. That could put pressure on the core business. But really, Tesla's just got to continue to push the envelope forward and continue to innovate. That's really what drives the excitement in these shares.
All right. Well, we'll continue to monitor this. Thank you, Alex. That's Alex Coffey, Senior Equities Contributor and co-host of Next Gen. All right, let's get insights on the news that's shaping markets. For that, we want to welcome in John Leckus, President and Senior Portfolio Manager, Leader Capital. John, thank you so much for joining us today. I'm curious to know, before we get into kind of your views on portfolio composition in terms of today's day and age and what we're dealing with regard to trade policy, we got new economic data today out on the job market showing that the private sector only grew to 37,000 jobs in May. That's according to ADP. What is your reaction to this data, and what does it tell
That's
you
bullshit.
about the economy?
Well, look, we think unemployment remains low, and so that'll be our look on it is that remains inflationary. You've got two kinds of inflationary gauges. Really, you've got price inflation, and you've got wage inflation, which really came about as a result of COVID. So we think unemployment this Friday it will remain at 4.2%, and so that continues to be inflationary in our minds.
Do you think also, when you think about the jobs picture, are you expecting a divergence from ADP to the government's payrolls report? Are you expecting to see strength in jobs added?
You know what? I think it'll be I think it'll be a push. I don't think we'll add too many jobs, but I don't think we're going to lose that many jobs. We think the economy remains strong, and really to that point, we do not think the Fed will cut this year. We think ultimately by the end of this year, Fed funds will be 4%, 10-year will be 5%, 30-year will be 6%. And the good news there is that's a normal curve. And that reflects a still strong economy, despite rates, in our view, going higher.
So then, given that that's your view in terms of your expectation of where you see yields, you're expecting that by year end, right?
Correct.
And if so, what's driving that outlook overall?
You know, a couple things. This administration is on a low dollar policy, and of course, you know, as that dollar goes lower, inflation, you're going to get more price inflation. And in addition to that, you know, this tariff situation that Trump's created, you know, is causing, you know, a lot of countries to sell dollars, which is, you know, push that a little bit lower, by other currencies that they can trade freely in. So we think we're on a low dollar policy. One, you know, to pay off our deficit with cheap dollars, but two, you know, to drive exports. But the bad news on that is that that's probably going to, you know, foreigners are going to demand to be paid more for receiving cheap dollars.
And then when you think about what all this means for investors today, what are the risks that you see for fixed income investors this year?
Duration. I mean, that's going to be your primary risk. And, you know, so, you know, we've remained in the short end of the curve really the last 2 to 3 years. You know, we might change our view on that, but probably not likely. And I'll use 2 examples. The last 2 times that the Fed cut rates, the 10-year yield actually went up and the 30-year yield actually went up. And the reason for that, you know, I've seen a lot of bannering, but the reason for that is really very simple. The Fed is cutting interest rates in an inflationary environment. They should not be doing that.
Oh, boy.
Their job is to cut interest rates in a recessionary environment. And so when you do it in an inflationary environment, you get exactly the opposite effect. You're just throwing gas on the fire. So
Interest rates are too high.
They can figure that out. And that would be a reason why they will not cut this year until we get some good indicators that we are moving into a recession. We don't think that's going to happen.
You fat idiot. Interest rates are too high.
Well, John, the pressure is on from the White House. President Trump posted on Truth Social earlier today, right after those ADP numbers, saying the numbers are out. Quote, too late, Powell must now lower the rate. He is unbelievable. Europe has lowered 9 times. That's a quote from the president. Now, I know there has been pressure from President Trump on the Fed chair, and obviously, you know, with Jay Powell tries to remain apolitical, but I mean, what do you say to that? I mean, there are other calls saying that the Fed is going to be, or it is already too late with regard to cuts.
Well, look, you know, unfortunately, Trump's, you know, I mean, just his position on tariffs, you know, if it's broke or if it's not broke, fix it. I mean, that's what Trump's doing.
It's broke.
He's looking in the rearview mirror. Traditionally, when the Fed does lower interest rates, he's correct about that, you know, that you can make a plan duration. You can buy the 10-year, buy the 30-year. But until the inflation cools, you know, Powell is doing the right thing, because if he lowers rates here, you're going to move mortgage rates even higher. And I know President Trump doesn't want that, but he'll continue to put political pressure on Powell. You know, that's an easy scapegoat for him.
And John, there's been concerns about weakening dollar. Do you see any risks, especially when it comes to, you know, the headwinds from trade policy? Do you see any cause for concern with regard to the dollar status as world reserve currency in the near term?
You know, that really started with Janet Yellen. You know, she came with her sanctions, which is the same thing as tariffs, and that has been a disaster. That did not work. Financial markets are too complicated. And anytime you start fooling around with them, with tariffs, sanctions, whatever, you're going to gum up financial markets. And case in point, we've got this war, and now people are trading oil in euros, renminbi, rupees, rubles, etc. And that's a problem. And that's a little bit of a crack in terms of us being the reserve currency of the world. And the tariffs that Trump's coming with certainly don't help that. They exacerbate that.
Okay, all right. Thank you so much for your views. That's John Lucas, President of Leader Capital. Thank you so much for your time today, John. All right, we've got a lot more to come here on Trading 360. Next up, it is the big 3. 3 stocks, 3 charts, 3 trades. Rich Tech goes through the technicals, and Don Kaufman takes us through the trades on his list today. Boeing, the VIX, and the silver ETF, ticker SLV. That's next on Trading 360 here on Schwab Network.
Jim's having lunch, yeah.
So Studio had his big trade of the day, and he's calling it a day.
Yeah, he got in there. Good call that we did. Bought 100 contracts.
Yep.
That's insane. That was a good ass call. That was what, 100% trade?
Could have been, yes.
It was 16 points worth.
Mhm.
From the time we bought it to the time we exited.
That's the way to make your money. I'm watching the 2-minute right now, hovering above the 9. They need to fix that sound. That's what I was getting ready to say. Put that thing on there and boom, 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 boom.
He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen.
Jenny Horny.
1 p.m. Eastern, only on the Schwab Network.
Hello, my name's Jenny Horny.
Welcome back to Trading 360. I'm Diane King Hall. Time now for the big 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the trades. And here to take us through the tickers on his list is Don Kaufman, co-founder of Theo Trade. It's great to be both of you. Don, actually, before we get into your trades, I'm curious to know your big picture take on what we're seeing in the market. It feels like the bulls are trying to carry the momentum forward despite these ADP jobs numbers. What's your take?
Yeah, you know, what we're seeing today is a little bit of just positive drip in the marketplace. I mean, this week has been, well, we're still waiting for tweets. That's what we're constantly waiting for. And the rhetoric really on some of these trade negotiations, and at least in my opinion, does not sound great. So for now, yeah, you know, tech is back and it is driving some of the trade a little bit higher. But overall, we are still in a fairly volatile situation.
Okay, so fairly volatile situation. Let's talk about the first trade on your list. You've got Boeing on your list. Look, it's been outperforming the S&P 500 year to date. What's your approach now?
Yeah, you know what? It really has actually had some great outperformance. I mean, look, I'm going to put on a bearish trade here, but it's not because I think that Boeing is necessarily like booming. Right now, I think actually it's a kind of
Until we break that.
possibly in. There is a turnaround going on in the underlying. But at this point, it's okay to say that something has moved up a little bit too far, a little bit too fast. And in this case, yeah, it's bearish. However, again, the worst is probably behind it. Too far, too fast. It's up 24% in a year to date. And in the near term is just really in overbought territory. So as such, I'm actually
Overbought territory.
a bearish position here.
Boeing.
I'm going to go all the way out to the August 15th expiration. I'm going to be buying a 200 put, selling a 190 put. So just a pullback a bit under that 200 level. That's actually done. Again, buying the 200 put, selling the 190 put. It's a $10 wide put spread for a $2.40 debit. Again, looking for a pullback a little bit under the 200 level in the next couple of weeks.
Okay, all right. So, Rick, you're up. Take us through then what you're paying attention to from the chart, especially given this approach that Don has.
I can see the thinking behind it. There's a few things that maybe if I were thinking about doing a trade that might give me some pause before I did something bullish here. And the things that I'm referring to are, one, our general price pattern here. We have one trend line going up across the lows that's much steeper, and one going across the highs that's much more gradual. This is typically called, you know, a rising wedge type of pattern here. Counterintuitively to the name, it's actually more bearish of a pattern. It suggests that the anxious buyers are running up into sellers who are keep selling at kind of less of an increment up each particular time. So typically this would be regarded as a more bearish setup here. Of course, it can go either way. What you're looking for is a breakout beyond either of those two trend lines. And in this case also, back below these old highs here near 209.66. So that would be a potential support area to watch and see if price does breach that. Now, the second thing that looks a little bit more bearish to me right now is that we have a situation of bearish divergence on the RSI. As Don said, we are oversold here. This can be regarded as a sign of strength in a trending market here. But we have a situation now where price is making new closing highs. RSI is trending downward fairly notably here. So not really what you'd want to see. You would want to see them making new highs together in tandem, in conjunction with each other. So a momentum slowdown could be a sign of
no soup for you.
Pullback in price here. Nevertheless, if we were to consider our relevant standard deviation channels and our volume nodes here, we do see a volume node here, a smaller one, here about 205 or so. This could be an area to watch for a potential pullback for some support. We've also got this area here right around 197, our green line. If you were to backtrack, it represented an old intraday high that could be a supportive point traders might have their eye on. To the upside, if we were to move higher beyond those old recent highs near 215.80, the +3 standard deviation channel comes in just below 224. That could be one area to consider as well.
Okay, Don, I'm going to yield the floor back to you. What occurs to me, though, you have August 15th as your timeline here for this put vertical. What's the risk that you have to keep in mind?
Today's lunch,
Yeah, you know what? When you're looking at both,
Diane, today's lunch is chicken barley soup with cumin and cinnamon, carrots, mixed vegetables, celery, and corn, and onion.
Nothing for you.
Yum yum. Soup for me. I know you ladies are just jawing at the mouths for that. Especially Michelle. Okay, we're back to the 63 here. Chop, chop. We do need to come down and hit that right shoulder one more time. So Washboardjim is looking at the 6,000s here at $3.30. 340. Yeah.
What are they doing here?
Jimmy's watching his calls here.
Yeah, I know. I'm looking at the big 5-minute chart on my zones.
What's that?
I'm looking at the 5-minute chart on those zones I threw out.
Yep.
They're just trying to push it back into that green zone. Like they've been doing all day.
Yep.
Green to red, green to red.
Right now on the 2-minute, you're on the 63.
Yeah, I know, but I'm not paying attention to the 1 and the 2. I'm more looking at the 5 today. It's showing me a clearer picture.
Now I'm going to go get my burger. I'll be right back.
Here we go. As soon as he leaves. All right, I'm looking at the 6,000s. He missed the drop, though. I think he's got some money in it. I went to VWAP that time on ES, but not convinced.
Slow time of the day, too. Those fat cats are at lunch.
Well, you got that big European thing that happens in 30 minutes. They usually drop it then anyway. There we go. There's another push down.
A little bit above the orb. 5980. SPX.
Yeah, I'm waiting for my zone. You know me. I miss out on a scalp, but I have a plan.
Right now.
in the 6,000s at 270. We'll see.
Right here, 265, 260. Can come back and hit the 200 like it did before at 55, 75, 44. So I'll get my first ones at 260. And that's the orb also.
Yeah.
Oh, got this. I can't be watching that.
There we go. Alright, I'm out at 320.
You got lucky.
Contract.
You got lucky there.
What?
There's 320 now.
We're hitting the 63 on the 2 is the reason I got out.
Yep.
I mean, that was $50 a contract and 2 candles.
And it's in that same. It's in that bull flag too.
And it came straight off the orb. If you look at ES 1 minute or 2 minute, really, like it came directly off the orb.
Let's see if we break this flag. The European thing's already happened? Yep. Oh, excuse me. didn't want to put that there.
Where's it pushing thing now? Back at the board.
So I think the wealth management industry has to ensure that they're as relevant to the future high net worth individuals as they are today. And I think that will obviously mean a very digital.
There's 63 again.
Go, 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 go. What do I got two blue lines here for? Oh, 50. Oh, that's green. I'm going sideways in the flag here. Let's see, I'm going to be right back. Get my tea going. I'm done eating. on my tray. Let's go. Break it. Kind of having a hard time. Dun, dun, dun. $3.20. There we go. Break it. Break it, break it. Now we're back at the resistance line, so that's not much of a boom.
Yeah, I said my contract's for 320 a long time ago.
Yeah.
They're decaying pretty damn quick for it to be before lunch.
If it breaks this line, I might get a buck out of them. Never sell them. Tweezer top, break it.
Jesus. Jesus.
They didn't want that to hold.
What a freaking sell.
Private payroll rises, but that ain't in the news.
That midday drop. I wonder if they're going back for that 59.75 level.
Well, they could after that fall.
If they do it again, I'm going in big this time.
$260 and $230 now. I said it could probably come back and hit that 200, and it sure did.
Oh, did not even see the 200 on the 5.
Yep. It's on the 2 minute.
On the ES, it's on the 5. I was
Oh.
looking dead ass at the 1 instead of the 5.
Oh. Yeah. Oh, yeah.
That would have been clean.
With a tweezer bottom to boot.
Yep.
So I've typed in here we might visit 59.75.64. I was just a little bit off of that. Well, Funky ought to get you to come up here and help me clean my 30 acres off.
Give me a bobcat and a brush hog. Those things are amazing to watch.
Yep. I'm getting ready to buy me one of those push weed eaters just to get about 1.5 acres done.
That guy that I had come out and do mine, because I had 3 acres, but he didn't charge me that much. He brought a bobcat with one of those big bush hogs on the front of it, just to chew through all that shit. It was like glass when he got done. It only took him like an hour and a half.
Huh. What'd he charge you? 500?
Maybe, I was thinking more like 350.
Oh, God. That would be a bargain. I got acre.
You got a quote from somebody?
Not yet. It'd be a lot easier doing that.
I bought a damn weed eater.
Yeah, you know which one I'm talking about, the push one?
Mm-hmm, yeah.
Well, come on, you got to do something here.
Because with that attachment of his, if you've got any downed old trees and stuff, he can just turn those bitches into mulch.
Oh. Okay, we're coming back down for I think this is the 3rd touch now. So we got to do something here, yeah, this is number 3. So either sell it. We could hit the head and shoulders, right shoulder one more time on the head, on the neckline. There's your left shoulder, head, right shoulder. There's 290. I got 6 of these at 245. Always clean. May I help you?
Hello?
Yeah, what's up, baby?
Good morning. My name is Sophia. I'm with the Senior Resource Center. We mailed you a card about our newly updated Missouri Final Expense Plan for all Missouri residents. Have you received it?
No, I haven't.
No worries. I am here to inform you about new state-approved final expense life insurance plans designed to ease strain on your family during difficult times. Your age plays a factor in maximizing your benefits. So can you please confirm how old you are?
Oh, only if you go out with me and have a beer.
We really want to look after you. Our plans provide all end-of-life expenses to ease your family's burden. So, may I please know your age?
I'm not, I can only tell my mother that. Unless you want to go out and have a beer.
That's absolutely fine. There's no need to make any decisions right now. This is just an informational call to let you know that final expense insurance helps cover costs like funerals, medical bills, or debts. It provides guaranteed coverage and quick payouts, offering peace of mind for you and your loved ones. So how old are you?
You really want to know, don't you? I'm old enough to be your daddy.
You're squeezing hard on the 2 minute.
You know I have fun doing that, don't you?
Yeah, but they're on Robo dollars, so.
You mean that wasn't a real girl?
Yeah. So, look at your 2 minute ES.
I'm looking. Oh no, I'm looking at it. Oh yeah, that's beautiful. Samantha didn't want to go out and have a beer.
Alright, just jump above the 63 on the 2 minute for the first time.
Come on, Samantha.
I like the upside here.
At $2.95. I should go ahead and take it.
We just touched the 200 and VWAP 1 minute.
Samantha, call back. About
6,000 at 260. That's wrong. Oof, never mind. Just cut through the VWAP.
We have a diamond-shaped pattern right now. down. Oh, AMD would have been a good buy today. After that run yesterday.
Back at the orb. Ugly candle open that. Bottom of the sword zone. Patience, patience. Here we go.
Yep.
Just hit the 200 on the 5 again.
We got a double bottom coming up off this here candle. Right about now. So I'm gonna grab. These last ones went for 295. These are 185. 1.85 for a double bottom.
Yeah, I mean, at 185, I'm in the 6,000s at 185.
We got them at the same price.
Okay, yeah, I see your chat now.
That's a double bottom off a tweezer, off the wick. 185.
It's also off the 200 on the 5 on the S.
I got 185 and 190.
I'm not going to hold them very long because there's so much damn resistance above us.
Yeah. Agree.
On the ES 1 minute, you had VWAP, the 200, and the 63, all between the 58 or 59.89 and 59.90 level. So
In the
that's a
orb.
hell of a lot of resistance.
This doesn't hold. I'm gonna get it out. $59.76.48.
Yeah, I wouldn't hold these too long.
Was a miss, and all things considered, we're having trouble finding a direction in this market. First 2 days this week,
What?
we opened lower and rallied higher. Today we opened higher and kind of are off our highs here, kind of just directionless. But that being said, those lower bond yields, if you're worried about the bond market, if you're worried about inflation, that number's not going to hurt you, Kev.
Yeah, well, right, because we're seeing a little bit more of a risk-on tone, so you have some buyers kind of stepping in. You know, what's funny about the bond market, Kev, is that every day is it's a new day for yields. There's a new narrative, there's a new story to be told here. And I think today is more of the stagflationary type of prints that we saw. You have buyers kind of stepping in the treasuries right now, especially when you're looking at the 10-year bond. Let me, for ISM services, we have to just be mindful. Obviously, there's going to be some tariff residual effect. People think services do not have any type of exposure when it comes to tariffs. That's absolutely wrong. They will have an impact here. But seasonally, May and June prints, Kev, are traditionally weak for ISM services. This is actually the lowest print that we've seen since July of 2024, when you had a contractionary print. Before that, it was May of 2024, and before that, we got to almost a contractionary print in June of 2023. So there is a little bit of seasonality here at play. But I think the jobs report's going to give us a lot of insights as to what's happening with the economy. You are right. The ADP report's going to overstate services. It's going to understate the manufacturing sector. We know that there's some fiscal measures and some policies being put in place in order to try to beef up the manufacturing sector and the industrial sector, even though it's only a small portion of our economy. So the jobs report Friday, I think, is going to give us some better clarity. What you do not want to see is any type of negative print coming into the picture here. And I know that seems a little bit far-fetched, but I think the market also did not believe that we were going to miss by this much when it comes to ADP. But once again, if we start having that type of climate of jobs starting to contract in this market, and you are seeing maybe a stalling out in some economic growth measures, which
Not holding up.
Sentiment side.
Mm-hmm. I don't know that I wouldn't get get back out of this if you didn't get green on it, or at least break even. You're getting a death cross, 63 below the 200 on both the 1 and the 2.
I'm gonna turn the air down here. It's 79 degrees in here. I'm still in these things. We're kind of under the 9 too, so I don't, I'm kind of.
You touched the break even on that wick up.
Yeah. I'm gonna have to leave and go check out the air conditioner guys. I'm gonna tell her. I found a $20 bill in the parking lot this morning. Yep, didn't hold.
Mm-hmm.
Did you get out?
Oh yeah, I got out. Like I scalped it for like $10 a contract. I got out within 2 minutes. When it didn't break the orb.
Yeah.
I know my weakness. I don't have the mindset to stay in a trade for 15 or 30 minutes.
We just busted below support. Double bottom on that first candle on the 2 minute. Oh, that's the 5. Let me look at the 1. Yeah, I still got more room. We could drop quite a bit.
Good.
Quite a bit.
I've got a support at 59.78 ES and 59.75 is the big zone.
What's that amount to on the SPX? I got 59.68.38.
You're going to be 9 points below that, so it'd be 59.69 and 59.64.
Yeah. Before you know it, I'll have 12 contracts of these. I was cleaning up the leaves on the curbs. Stumbled across it. Ashley wanted what? What the fuck?
Hey, that was your first support. We're blowing through it. They're going to take us back in that 59.75 zone that we bounced out of this morning.
I gotta leave. Okay, we're getting right to the support right here.
RSI's oversold.
I gotta go. Air conditioner guys.
Alright.
It sucks. I'll be trading this thing on the road at $1. This is a double bottom here at 59.6838 on the SPX. Okay, let's get some money on here. Let's see how lucky I am. $1.
59.90 at 230.
I'm up 100 on them. Give me 130. $115. I gotta go meet the air conditioner guys, so take over for me.
Alright. Y'all take 59.90s with me.
Okie dokie. RSI is down there too.
Mm-hmm. Yeah, that's what I was saying. It was burning up when I took them.
We're 130. So I got my shit.
The 59.90s are up $80 a contract since I took them.
Yeah.
But we're hitting resistance right here, so I'm gonna sell it $3, so $70 a contract.
Hold.
This is the 9 on the 2-minute.
Yeah, I'm gonna hold this double bottom. See if we break out. If not, I'll get out at $1. Be a 170 loss. Oh, excuse me.
You broke the 9 on the 2.
Let's break the 21. Then it'll be a double bottom resistance.
Yeah.
This would be an exit idea for me right now. But I gotta meet these guys. Dang gummit. I hate being in the trade. I really don't want to sell it right now.
What you need to watch, a strong rejection point is the 5-minute ES. You see how your 9 and your freaking 200 are stacked on top of each other?
Yeah, and I'll be looking at the, yeah. And that's the 200 EMA we got to break. And the 200 SMA right above it, and that's right below the 9. The 9's crossing down over the 200, so it's not a good sign.
Yep.
But if we break it, I think we could break the other catalyst.
I mean, based on that EMA cloud on the 5-minute, this afternoon might be bloody.
Okay, I'll be right back. I gotta go.
Chop, chop, chop.
Mm-hmm. Definitely, Angel. Yep. I don't see a lot of resistance either. EMA cloud just flipped that green. Damn, they don't want to pull back. I don't want to chase it in the middle of the run. There she goes. Might rescalp these 6,000s if the 1 minute hits the 63. Nice little pullback here. We're into 6,000s again. Want to try to grab them at $1.05. Trying to get them a little bit cheaper, Randy. I need one big push down. I want to try to get them around $1. Not enough sellers, I don't think.
I'm here.
That's it.
I didn't leave a sound on, did I?
No, it was wonderful. Little songs. I loved it.
I'm back. Did you hold the fort down?
Yeah, I held the fort down. Kept everybody from jumping overboard.
Very good. What a mess. Looks like well, do I need to interrupt? Yeah, right to the 63 on the 1 minute. To that 59.81.42 that I've been talking about most of the day. I'm going to call that the pivot point. I got out at 180. So that was it.
I'm trying to get back in them around 105, 110.
Yeah. That was nice. I got there, I'm going, yeah, I made $800. So I had,
Trader alive.
you know, $800 using a wet vac on a little bit of carpet. You see that picture above there? That's a draining thing for the air conditioners, and it was clogged up. I had to unclog it, and then I had to suck all that water out on that carpet, shampoo it. And so I made 200 there and 800 here. Randy, did you miss me? Someone's got to say they missed me. Richard? I know Richard did.
Affirmative.
Oh, you just got back from work too?
Affirmative. Affirmative.
Affirmative. Michelle didn't miss me. Sheba did. He's still here. Well, I left this damn voice off. I hope that was okay. I didn't think about it.
Frankly, my dear, I don't give a damn.
That was a good one. We're at 120.
Yeah, I don't want to enter into this chop. I want something to happen one way or another. I feel like I'd be chasing it.
Yeah, we've been in a Darvis box all day here. Yeah, you don't want to jump in here. It's depreciated a lot. I mean, I was looking at 180, 185. I didn't know if it got any higher than that.
It didn't.
Didn't? Good. I got out at the top then. Well, what a small blowhorn.
Just gonna sit here and tell myself I will not break my rules. I will not break my rules. Wow, mother effer.
You broke your rules. You didn't break your rules.
I didn't break my rules, but I also missed that one. I saw that triple bottom sitting right there on the 1 minute, and I was like, golly, that looks
Yep.
interesting.
Yeah, I'd have jumped on that hammer with a. But I was too late. I didn't get here in time. It was at 120. I could have made a couple hundred there, 300.
It's over top. Those are the kind of things that will make you want to break your rules. And that's what's going to get your ass in trouble.
Beige book at 2 o'clock. We've got a double top now. The rules were made to be broken. That's what I learned in high school. I got suspended for bringing an 8-gallon keg up to the 3rd floor, John. I guess we weren't allowed to do that.
I got suspended for spray painting hot pink heartbeats down the side of the buses.
Yeah, oh, that's pretty bad.
Yeah, but they looked a lot better.
Yeah. I never rode in a bus. I walked a foot of snow 2 miles just to go to school.
I didn't ride a bus. I broke into the school at night.
Oh, that's even worse. God. Uphill both ways. I'm trying to understand what you're getting ready to say, Richard.
He's talking about when those old people tell the stories. Oh, I had to walk 40
Oh.
miles through snow to school, and it was uphill both ways.
Oh, yeah.
Can I get 3 black crows here, please? Just give me something I recognize. Draw me a trend line. Because I see a pretty good trend line on the 1 minute. If I can get my 3rd black crow to touch it, I'll jump in.
Now, ladies, I'm getting ready to show a picture, so don't get hot and bothered for me.
Purple top right here.
Me on the right.
God, I wish I could read that bumper sticker. Yeah, that's all I want to do. I don't care anything about the entire picture. I just want to read the damn bumper sticker.
I can't remember what was on it. That's my old car.
manager probably said something along the lines of get cash, smoke grass, and chase ass or something like that.
Probably. I'd say the 70s were a lot of fun.
You know what I like about high school girls? I get older and they stay the same age.
Nice knowing y'all. You leaving?
Sports.
Huh. It's up there.
Oh, never mind. It's right. It's on the way out. Didn't he hit the $11,000 bingo? I mean, $11,000 jackpot on the first?
He probably did.
Golly, look at that. 1, 2, 3, 4, 5. This is a 6 top. Damn. Finally.
It's probably going to come back up here to resistance. I'm about ready to just clean this up, start fresh.
I mean, my ES resistance zone is at 59.96.50.
My resistance for there we just hit it just now. 59.87 something. 1, 2, 3. Four quad top at 59.87.37 for the SPX. And they're at 160. So let's see if we pull back here. If we still can go up, if we break it, we could hit 59.89.30. There we go. 190. Should have broke your rules.
I'll get the next one.
Well, I got out right here at 180, 185, so I'm not hurting.
I'll get the next one. In case you haven't realized it, I kind of make my specialty the knives with the entry points and the
Yeah.
entry guns,
Yeah.
so I can get out of them in 10 minutes.
Exactly.
So I know I don't have the mentality to stay in one for an hour and a half like you just did.
Yep. It's a safe bet. After so many times, though, you'll get used to it. Because you'll ask yourself, damn, if I just held. Damn, if I just held. But sometimes that's how I get stuck. Too, you know. Not very often, but it happens. So I'm going to try to predict where I think we're going to pull back to. If we don't hold this here previous resistance, I'm saying we could do it right here at the triple top and hit the 21. Right at 59, 85, 98. And we have hit the 63. So it can pull back to the 6. This is something to think about if you're using the moving averages. Find out which moving average it hits the most and trade it off of that. So we hit the 21 many a times. You can see the 21, the 21, 21, 21, 21, 21. And we only hit the 63 once. And the 9 keeps it bullish. Oh, I don't think I'll ever stop flirting. Mr. Hickey.
And prices paid 68.7. That was higher than expected. So
Talking about the 10-year note.
Out of the ISM services at all, Nicole, that was really a number that accelerated the bond buying and yields heading lower. So weaker on the ADP.
Baba bounced a little bit today.
Better on the PMI.
K-Web.
So all things considered a mixed numbers, but the market, you know, if you ask traders here, you'll as I watch the markets, this market is drifting.
Oh, shut up.
Other than yields, not much going on in this market right now, Nicole, and we're waiting for more data, especially at the end of the week when we get non-farm payrolls and unemployment.
Yeah, and look, as you get this weaker data in the private payrolls and ISM, you see people going to safe havens, gold, right? Gold is where they've gone. We've seen gold up $27 today. It's back above 3,400 a troy ounce. That's notable. And the fact that they're going to bonds as a safety. You know, as Jamie Dimon is out clamoring that U.S. bonds are maybe not a safety play anymore. Those were not his words. I'm paraphrasing, but he's talking about the concerns about U.S. debt. But they are looking to U.S. bonds today for safety. They are.
Well, I'll tell you, I like Jamie Dimon. I think he's one of the most powerful financial CEOs in the United States and possibly in the world.
No, really.
He's known for talking his book, and he's known
You ever
for
met
being
me?
kind of a risk manager and giving the gloom and doom. When he feels that the market's getting too positive, he'll give the other side of the scenario. And when markets are down, he gives a pretty positive scenario. So Jamie Dimon's known for talking his book and giving that counterweight to the market sometimes. So yeah, I appreciate him as the leader that he is, but he is not afraid to give an honest and sometimes counter assessment of the economy.
God darn, man, 220.
We wonder where we can get a straight answer. Every person seems to have multiple things on their minds.
That'd been $1,100.
From Kevin Hayes, straight answers.
$1,200.
Nice to see you at the CBOE. Thank you. Let's take a look at the bigger picture. David Nelson, Chief Strategist, Bell Point Asset Management. Some of your thoughts on the conversation we just had.
Now stop with the fear mongering, Nicole.
So I don't get feed off. A lot of what we said is true. Jamie does talk his own book, but Jamie brings up some pretty big points. One of the things that Jamie brought up was the fact that we take the dollar as the reserve currency of the world. We take it as for granted, like it's our birthright. It is not. We earned it, but we could lose it. BRICS, which is Brazil, Russia, India, China, South Africa, is now a lot more countries. And increasingly, transactions around the world are being done in non-dollar currency, and that's going to be a concern for us. I think if we keep running debt and deficits as large as we are, and
Hey, we lost the trend line.
you look at the interest on our debt and it's going parabolic, as long as that exists, investors in U.S. Treasuries are going to demand more food on their plate. And I think as the deficit widens, then...
Okay, we're down here at the 21. This is what I talked about earlier.
We'll be talking about 6.
Yeah, we just flew through it. We're headed
We got
towards
it.
63.
Well, this is a triple top. Does anybody know who that is? 140. $140, baby. Don't you remember who?
I'm gonna see if it'll hit the 63 on the 1 minute on the S.
Okay.
Because that would also give me 3 black crows, which would be like I love 3 black crows to a moving average.
Yep. I do too.
Almost there.
Yeah, Sheba, what do you think about that? Kathy Wood. Okay, here's $100. $10 contract. Oh, no. I need to take off my shoes. It's not holding. I'm gonna stop out if this thing don't run. Okay, we got 3 black crows with 2 hammers and a doji. Spinning top. Or a doji. There's a doji right there. With a tweezer bottom. No. Gork's a liar. Damn it. There's your 63. Sparks. You must have hit the lotto. If I didn't look at the markets, I'd probably be in prison. Okay, I'm going to add on right here. I don't want to, but I'm going to. I really don't want to. Yeah, if I won the lottery, I'd be trading for just an hour or two. There we go. I'd be on a yacht. Yeah, these things ain't turning the cash like I like them to. Well, well, well. Whale, double down. Snake, breakout, pull back, higher low, boom. And we're really close to the top. So if we hold to 63, we rechecked it. Now if we can keep the higher low here, I think I'll be okay. Peppolini, you look beautiful today. I love you. Look at Rick, he's memorized. That or he's stoned. You can't have her, Jim. So far we kept the higher low. Well, we're flagging out. Not feeling too. We'll know here any minute. I think I'm going to go for it. 110. We got 119 right now. The time, 219. See if we break out. I got 110 plus 140. Might not be as smart. $110 and 140. Let's go. I'm even. 125. No. Let's get it. Let's break it. There we go. 130. Now see, there ain't much room. I kind of wish. So I got to scalp this real fast. There's 135, so right there is $200. 135. Give me 140. I'll make another. Actually, I got more than, no, it's 200. There it is, 140. Well, didn't give it to me. Gloria. Wicked. Yeah, this is pretty tough right here. What the hell is that? Found some object in my mouth. Let's put that under third. What is that? What that is? Need to put that under a microscope. Well, took too long for it to try to break. Back to the 63. I'm hearing thunder outside again. Well, 59.81.78 or 59.80.94. I never did turn that air conditioner down. of people leaving today. Come on, come on, come on.
The Chinese government reported that Tesla's EV sales were down 15% year over year in May. That was a month in which overall the total.
Did the China government report that?
So here you have Tesla continuing to lose market share in China, which is one of our biggest concerns surrounding the story.
Oh, another bear.
As recently as 2023, they were number 2 in EV sales in China. Now, last month they had dropped to number 5, and it is an incredibly competitive market. There's a very brutal price war taking place over there. And if you look at the numbers, you look at the overall statistics, there were 16 automakers total that sold over 20,000 EVs in China in the month of May. So it's an extremely competitive environment. And they're continuing
The
to
2-minute ES is on the 61.
BYD number 1, but also Geely, Chang'an, and SAIC are some of the major companies that have been taking market share.
Yeah, and some of those, Chang'an and Geely, I don't really know those. I don't really hear about those much. Is Tesla doing something wrong or differently, or is it just that these other vehicles have come up and they're looking pretty good and desirable?
It's a little of both. They're losing market share. You're seeing some backlash from Elon Musk's political activities, across markets. In Europe, certainly, in China, the U.S., coming off a Q1 in which their total sales volume was down 13% year over year. I think a lot of people had thought that the worst.
There's a lot of negativity on here today.
That Q1 was probably the trough in terms of percentage decline. Turns out Q2 might not be much better than Q1. So, the sales numbers just aren't great for China. And in the U.S., you have, concerns about the big, beautiful bill and tax credits going
I have no
away,
concerns.
not only for EVs, but also for their energy storage products and solar. So it's really a triple whammy here that they could be in.
Why do you think the government should pay for everything? You fat-headed dillbull. It's coming out of our pockets. We don't need it. Let the companies pay for it. That's what Wall Street's all shook up about. They don't got that free money coming into all them special port projects that they want. Like the EV credits and solar panel credits and
lease, perhaps a few dozen vehicles on the road with unsupervised full self-driving in the Austin market. But the rollout really feels rushed, and we think there's much greater chance of a letdown than some sort of news that actually propels the stock higher from here.
Ross Gerber over at Gerber Kawasaki was saying Waymo is way better. What do you think of that?
It could be, but I think what Tesla has, and I think this is recognized by the market, is they have economies of scale. Waymo has a very limited number of vehicles on the road. With the approach that Tesla's taking, given their current production capacity, if they have a product that works, their ability to scale very quickly, it's there. So we still like Tesla as far as the autonomous driving race is concerned. We just are a little skeptical that there's going to be any major breakthrough that comes out of next week's event.
And then when you look at the other names in the competition, I mean, BYD is clearly a leader at this point. What names do you like a lot that seem to be up-and-comers that people maybe, if they're looking at the stock and they want to buy that stock, which names do you think have a good footprint ahead of them?
Yeah, we're pretty neutral to
we can see a good pullback
space right now. Looking at the other EV names, we have a sell on Rivian, we have a sell on Lucid, we have a hold on.
Why, Rivian just got $8 billion from the Biden administration.
Today, the only buy that we have in the space right now is GM, actually, because we like how much stock they've been buying back, and we think that's going to give them superior EPS growth.
This guy likes nothing
over the next couple of years. So we really like their buybacks, and from a valuation perspective, the stock looks pretty inexpensive here.
When we think about materials used for making cars, and steel and aluminum and rare earth and all of these things, obviously this has become a very big political conversation. Every day I'm hearing about tariffs on steel and aluminum, and I'm hearing about where is the rare earth coming from. Tell me a little bit about some of those topics. Do they fit in here?
Certainly not necessarily a near-term concern, but I think longer term, if the tariffs remain in place, obviously there's an incredible amount of aluminum and steel that goes into making automobiles. So, that's something we're certainly watching. The rare earth supply that could really have an impact on longer term.
A lot of negativity.
Growth, but we think one of the impacts of the big beautiful bill is that it's going to be a positive for internal combustion engine vehicle sales. GM is a winner from that, and it's going to have a negative impact on long-term domestic EV sales growth.
CRWV new highs.
Positive for hybrids. So, and then some of the other provisions in that bill related to energy drilling and leasing and permitting, suggest that we could have a lower oil price environment, at least in the intermediate term. And so, I think that that's going to be a negative for EV sales, which benefit when oil prices are higher.
Right, understood. When I think about the group overall, you're talking about neutral, not really hot on the group overall, but ultimately consumers are going to want to buy cars. We think about EV prices, we think about used car prices, new car prices. Any glimpse into where prices may go now on the group, whether it's EVs, where can people get deals on a car?
So double bottom with a hammer.
Big rush in sales related to fears over the tariffs in both March and April. Sales have really leveled off in recent weeks, and we think one of the impact, the market that we think is maybe going to benefit the most are used vehicles. And so a stock we really like there that we have a strong buy on is CarMax, ticker KMX. Of course, a used car pure play. We think they're going to benefit both from higher sales volume and higher
KMX.
Other dealerships have both a mix of both new and used vehicles. CarMax as well as Carvana, really the only pure plays on used vehicles. So that's one of our top picks in this space.
That's very interesting. Garrett Nelson, VP Senior Equity Analyst at CFRA Research. Garrett, thank you so much. Appreciate it. Good to see you always. Thank you.
Not me. I'm not happy to see
All
him.
right, still ahead. We'll discuss the current macroeconomic landscape, where the U.S. dollar really fits into this environment. Will it always be the world's reserve currency or not? Watch this when we're back.
Mullen. It's up 17%. Ooh, God, what happened here? $100 for 1 for 100 reverse stock split. The market's flat. Oh, that's the bond. 10-year note. Well, shoot. We got the 200 coming up here on the 200 and the 200 SMA back to that pivot point area where we bounced off before. That'd be the pivot point between the 200
names every day.
EMA and SMA.
Fast market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in George Noble, Managing Partner at Noble Capital Advisors. Thank you so much for being with us. I just was reading through some of the beige book. I know it's a little bit, the Fed's beige book is a little backwards looking, but it just talked more about slower activity, more uncertainty, concerns, etc. It didn't say anything super great, I'll tell you that. Your thoughts on the markets, because the market is getting closer and closer to 6,000 on the S&P, people like that. What are your thoughts?
Well, Nicole, good to see you again. It's been a couple months since I was on. I've got indigestion from the market, as well as from all the acronyms flying around Wall Street. I've got the tuna trade.
So you missed the run?
The tuna trade.
Are you saying you missed the run?
It's out of control. I think right now what you're pointing to is the uncertainty. I think that continues. Okay, it's not as bad as it was a couple months ago, but nevertheless, there's still a lot of uncertainty out there. And as the saying goes,
Not really.
markets are pretty good at pricing risk. They have a hard time pricing uncertainty, and they have a hard time pricing, easy time pricing risk, a hard time pricing uncertainty, and that's really the problem. So
I disagree with this guy too.
About the valuations have cycled back up to where they started the year. Continue to rise. We got tariff uncertainty. There's a lot of lumpiness and noise in all the economic figures. I just have a hard time imagining. I mean, the market's up 1% year to date. That's in dollars, not in other currencies, but in dollars. But yet, without question, this picture is much worse. So to me, I mean, look, it's a lot of momentum. The narratives are flying, but I've counseled caution all year, and I still think that's appropriate.
Understood.
Who is this guy?
Think about the U.S.
What the hell is he talking about 1%?
Around this 99 level. What do you make of it? What do you make of it at current levels? Why is it so important to keep focusing on the dollar?
Right. So I think the real importance here is less about currency markets and more about the implications for other markets, particularly equities, because I imagine most of your viewers are looking at equities. And as Michael Howell of Cross Border Capitalist said, the U.S. may win the trade war, but they're going to lose a capital war. And the reason this is important is because there's been, I think, $25, $30 trillion of foreign capital has come into our markets in the last dozen years or so. And, it was great. We had this U.S. exceptionalism. The economy was doing well. Markets were going up. Dollar was going up.
SPY from 482 up to 597.
I think the real question is
what's this idiot talking
how much
about?
fiscal expansion we can have from here. There's question about monetary expansion as well because of the sticky.
Did you miss the trade, my man? My boy? Did you miss the trade, old man?
You got to tighten up your belt, pursue austerity, raise your interest rates. But the idea of austerity here, people say we continue austerity. Austerity? Are you kidding me? It's not a thing. Spending is increasing year on year quite significantly. And someone joked to me the other day, and I think I mentioned to you, Doge, D-O-G-E, is dead, D-E-A-D. It never was a thing.
God.
Well, I don't know. I mean, they spent a lot of time on it, that's for sure. Let's talk about going.
I don't like this guy. Another liberal. Well, you're really pulling him up today, Nicole. We missed the run. Going back to work. I'm not. I'm at work. Oh yeah, Verizon, didn't it have, they were talking about Verizon yesterday. $20-day 1 hour. Let's see if it retested this a little bit lower. That's like a perfect pivot point right there at 43.44. Well, they're almost there. 43.43. Hey, we're pretty close. Let's raise these 6,000s to 59.95. A lot of negativity today. I'll be right back. I'm looking at the 59.95s now. What's 59? Well, might go to 59.90s. We're up to 63 on the 2 minute. Right down to the 200 EMA. Come on down. Come on down. $59.90s. It's at 59.81, baby. $59.90s. We're getting close to the 200. And we got the orb. There we go, right there. Here we got the top of the orb. $130. Come on. $135. $59.90s at $135. Come on, baby. Three black crows with not a tweezer bottom. Nope. 150. $150. Let's break it. Break the 9. We got some more negativity here.
Yeah, I like a lot of the AI.
Come on, baby. Break it. Back to 135. Could have got 150 per fast scalp, but we'll just wait. We got to break the 9. Come on, come on, come on. It's like the market just died. I have to go back and look at my weeklies and my daily candlesticks after I get out of this one. Ooh. Come on, let's go. Holding up the 200. No. The SPY just went under the VWAP. It's gone straight across. Trump administration plans to move Greenland from U.S. European Command in Northern Command. Oh, really? Poll of stock market magnate stronger than Musk calling Trump's budget a disgusting abomination. God.
Right now, we're in the green. We are at 59.80, 56, up almost 0.2%. The Nasdaq also in green territory today, up about 0.4% at 21,743.39. The Dow just about flat right now. We're slightly in the red at 42,516.065 as we change red as I'm saying it. And the Russell also looking flat today, down about 1.78 points. Now, as we take a look at some of our futures products, let's first take a look at the dollar. Down about 0.4% on the day at 98.73. Gold up on the day, 0.7%. Trading at $3,400.70. Crude oil costs you $62.91 a barrel right now. That's down about 0.8% on the day. And Bitcoin trading above that $105,000 mark at $105,560 right now, down more than 1% on the day. To kick things off with a look at the broader market, let's bring in Kevin Hanks, our senior equities contributor on the Schwab Network. Hey, Kevin, thanks for joining us this afternoon.
Good to see you.
It's good to see you, too. What are your thoughts on today's market action? It's been pretty muted for most of the day.
He said Kevin Hanks.
Yeah,
it's Hickey.
Summer markets tend to do things like this.
What is it? Hanks or Hickey?
To overreact to them. It's kind of a boring trading day. We're waiting for big news.
Back to 130.
And that is non-farm payrolls and unemployment. Did we get news today? Yeah, we got some news today. ADP, that came in a little weaker than expected. PMI, composite flash, came in a little stronger than expected. And then we got that ISM services number that came in pretty significantly weaker than expected. So all things considered, ADP is an important number, but it's sometimes not always correlated to later in the week's non-farm payrolls and unemployment. So summer markets and a little bit of a slow trade, and that's what we were doing. It seems the market seems a bit listless here and not really moving strong in either direction. The big move today is probably in bonds in the 10-year, with the 10-year yield now sitting around 4.37. Pretty significant rally in 10-year notes today. So that's one thing that will change some of the perspectives on lower interest rates, but we have to watch. The economic data that we're getting gets much more important later in the week, especially on Friday. So yeah, this day, put this in the category of a boring, slow summer trading day.
We need a big breakout
Summer
here.
trading days can be welcomed with some of the days that we've had in the recent weeks, right? But what do you think is behind those bond moves, that rally that we're seeing in bonds today?
Yeah, well, I think it started out with the weakness in the ADP number, and then that ISM services number was, remember, it was 49.9 was the composite number, so it wasn't very restrictive, but it certainly was. It was a big miss based on the expectations. So
let's go.
And some of that activity there, I think, spurred a little more of a bond rally than we had already. Yields were already down at the start of the day.
135. That's where I got in.
The ADP number. So I think a lot of chips now are slid into the Friday's number. If Friday's number comes in weak, remember the expectations are for about 129,000. The expectations are for a 4.2% unemployment rate, 0.3 on wages, and 3.7% year over year. That's down a tenth from last month. If we get that number or something weaker than that, the bond market might start to come into focus here, and that might catch the attention of some Fed members. But that's coming. That's still 2 days away. Right now, it's a dry powder kind of day, a wait and see, as we have a big number coming up. Remember, we're late in earnings season now, and there's just no real reason to make any big moves ahead of that payroll number on Friday.
Yeah, and as we talk about Friday and waiting on that jobs report, ADP isn't always correlated to it, but sometimes they align. Do you think this gives us any insight into what we're going to see on Friday?
I don't actually. I mean, if you look at the breakdown of the ADP number, it was leisure and hospitality. Think about this. There was one category, company size, business sizes from 50 to 249,000 that added 51,000 jobs. Every other category, 1 to 19, 20 to 49, 250 to 499, and over 500, all negative in terms of numbers. So this was a number that was very muted and just didn't give a lot of, a lot of color into what the market's doing. So remember, this is a private payroll data that we get from that payroll service ADP. So although it's a good amount of thorough data, it's on their customers, and so it doesn't
Come on,
have to
break.
do with government. It doesn't have to do with a lot. We're not going to get a labor force participation rate.
We're flagging again.
We're not going to break it down. So I still think, remember, the number one data point in any month.
I hear this data point all the frickin' time.
So we'll wait for that number. ADP, we'd like it if they were correlated and you could gain some information off one or the other. As traders, you just can't trust that it'll be the same. Remember, last month, ADP was 62,000.
I'm at 125 in these things.
At 177. So there's just not enough correlation for traders to take any real weight.
Even right now.
Now let's move to stocks now. We saw something pretty rare happening today. Apple got downgraded by Needham. Now, as I take a look at them, they're trading down only 0.1% right now at 203.07. So didn't take a huge hit from it, but highly abnormal to see them get downgraded.
And Apple traded most of the morning. Apple was positive. It traded as high as 206.24 today. So this morning when the market opened, it was still opened higher despite Needham taking it from a buy to a hold removing their price target that was 225 and basically saying in their note they think the 170, 180 range might be a better level to get into, which is significantly lower than it is right now. So yeah, Apple, even though if you look at the chart, it's sitting right at its 50-day moving average.
Oh, shut up.
Pretty good sized downgrade here, but really not a lot of effect on Apple. Matter of fact, Apple spent a lot of the morning in the green today. So yeah, not a real clear
Not much of the day.
there, but not good news for certain. They think that
Downgrade.
we're 12 months away from a new iPhone cycle that could boost demand for iPhones, and that, like I said, 12 months away.
Needham Laura Martin
It sure
breaks
is a long time
down
now. What's not a long time
downgrading
is
Apple
closing bells
hold.
coming up on us. Any earnings that you're waiting to see after the bell today?
No, we're slowing down a bit in terms of earnings. CrowdStrike was a big one. That stock is down today, but it had rallied a lot. I think as I look at what earnings are coming out,
Rising competition, duh.
nothing real jumps off the screen to me. Like I said, we're getting late now in earnings season. We're into the third month of first quarter earnings season, so names are getting a bit thin here.
So we are a little thin, but I want to talk retail really quick. We do have Five Below coming up, and I was talking with Nicole earlier about them today. We've seen all of these lower cost retailers, these discount retailers, post beats and then take major hits in the market. Do you think we're going to see the same thing again here because of the ongoing tariff impacts, or might this be our first one that actually sees a bump afterwards?
Five Below is a fascinating company because they post some data. Think about this. It costs them, as a company, $400,000 to open a new store. And every year, in the first year a store's open, it generates $2 million in revenue in the first year when it costs $400,000 to open the store. Here's the data. They've gone from 366 stores in 2014 to 1,771 in 44 states. So the growth of Five Below, and remember, it's a kind of a value retailer. It's a kind of a treasure hunt kind of place. You never know what you're going to see when you go in there. It's relatively inexpensive.
Five and dime shit.
And they could have problems with tariffs because they get a lot of their goods from China. So there's a little bit of play here, but this stock sold off from around $220 down below $100. Now it's back up, so it could be an interest. It's had a nice recovery off its recent lows. We'll see what they come out with.
Yes, we will. Thank you so much, Kevin. We hope you have a great afternoon and hopefully a light summer day on your end as well. Now let's take a deeper look at what's going on in the markets now. Joining us to continue the conversation is Sam Stovall, the Chief Investment Strategist for CFRA. Sam, thanks for joining us.
Hey, Marley, good to talk to you.
Hey, great to talk to you as well. So I'd like to start by getting your thoughts on the action we've seen
Where's
so far
Caroline?
this week. A bit of a quiet start to June, not looking like May so far.
Exactly. Well, June actually is a pretty boring month. In terms of average percent climb, it really is 9th out of 12. In terms of which June was the best, it was second lowest. In terms of declines in June, it was the second shallowest of months. And in terms of volatility, not surprisingly, it was second least volatile. So usually, there's not typically a swoon in June, but maybe a yawn in June.
A yawn in June. I like that. Now, Kevin was just saying it's a list day. A yawn goes right along with that. In June, do we typically see any sectors that do tend to see a boost in June, or is it just sort of blanketed across the board?
Well, we do tend to see some good movements, but I would tend to say that this time around things might be a little bit different because we are coming out of a
Head and shoulders.
I should say a 10% plus decline. Actually, it was 19%. And history basically says you want to stick with those 3 sectors and 10 sub-industries within the S&P 500 that were the worst performers during the market decline, because they're the ones that, in a sense, were priced to go out of business but did not, and tend to outperform coming out of that decline. And that's exactly what we're seeing right now. Since April 8th, the S&P is up 20%. 3 worst performing sectors during the decline are up 26%, and the 10 worst performing sub-industries during the decline are now up 32%.
All right, I want to move into tariffs, obviously, because tariffs are the one thing that could potentially throw our sleepy June off course and out of historical norms. What kind of impact do you think that we're going to see from tariffs? Specifically, let's focus on steel first, this new potential 50% steel tariff that we're seeing.
Well, believe it or not, we don't really think it's likely to be simply a negotiating tactic.
You better
we have
be.
a political strategy arm called Washington Analysis, and they are of the opinion that the current administration wants to keep the tariffs on steel and aluminum in existence for
Inverse head and shoulders.
4 years in office, because their goal
Back to
is
the
to
orb.
drive new capacity into the U.S. from sort of a defensive position, because why be reliant on other countries should there be challenges militarily? We don't want to be fighting them and also say, oh, by the way, can you sell us some more steel? So that's what they're saying is their goal is to be able to improve their defensiveness capabilities.
And I have questions for you, too, about, do you have any concerns about the after effects or the reverberations on other industries that use steel, construction, the auto sector? What are the potential ramifications of those staying in place for the entire 4-year term?
Well, a lot of, let's say, highway construction has to be using U.S. steel, so that should not be a problem. But when it comes to automobiles, yes, and so that could be a challenge because it would end up pushing up the cost of the automobile. Remember that many of the parts are going to be coming from outside of the U.S., so they might be subject to a tariff. And so you have higher cost of the cars, the new cars, which by default would then increase the cost of used cars, as people say, well, I can't afford a new one, let me buy a used one. And if more people are chasing after those used cars, the prices will likely go up. So also aerospace could be a problem, but that could be offset if we do end up getting increased defense spending from the beautiful bill.
And I want to talk about aluminum, too, specifically. We're all talking about steel, and all the steel stocks saw a big boost when we saw this, but not too much mention of aluminum. Now, aluminum tariffs that we've had historically have not sustainably boosted the profitability of U.S. production, and we are still buying about half of our aluminum from abroad.
From abroad?
Mostly from Canada, in fact.
That's kind of prejudiced.
Because they have lower energy costs. Do you think we're going to see a change to that, or do you think that there's going to be some sort of negotiation to allow that influx to still come in from Canada?
I think that what's going to happen, we probably will see some sort of negotiation because even though the belief is that the tariffs will be in existence over the next 4 years, leeway could be allowed with individual countries, whereas they're likely to use quotas rather than an outright repeal of the tariffs. So those countries most likely to benefit from this quota situation would be Canada and Mexico, but I think we are facing more challenges with the EU.
And do you think with the EU, you mentioned that with Canada and Mexico, the EU, do you think that we could see some retaliation on that end if they are not given any quotas or exceptions?
Yes, I think that certainly is a possibility. Because we could end up with a broader trade war with the EU as a result not only of this, but also of the other tariffs that have been levied.
And I know, Sam, that you've been keeping your eye on a couple stocks that you've been watching you think have some breakout potential. Can you walk us through what those are, please?
Sure. Well, as I had mentioned, we like to focus on those groups that were beaten up during the market decline. But since a lot of these groups have, or companies have done very well since April 8th, the question is, well, what hasn't yet moved but could be a potential breakout? And a company in that area could be Pure Storage, which has key partnerships with Meta as well as NVIDIA. We also think it will deliver sustainable growth and increase in market shares. MSCI is an index company, but 60% of its revenues come from overseas.
Everybody's negative today. I swear to God, they do this on purpose. They're just mad because they didn't catch the bottom.
a company like Southern Copper that's less well known? And also, what sort of technicals are you keeping an eye on that's determining for you that it might break out?
Sure. Well, our fundamental group basically is growth at a reasonable price. So a GARP approach, looking for earnings growth opportunities, but also incorporating economic considerations, value of the dollar, inflation, etc. And so the fundamentals are then given buy, hold, and sell.
We're at the 200 on the 5 minute.
Side, Lowry is the technical analysis arm. They are basically looking at underneath momentum. Power ratings is their proprietary measure that they look at. And so looking at those companies whose price is below their 150-day moving average, however, their power ratings are now above both their 50 and 150-day moving averages, implies that we're gaining momentum underwater, if you will, and are likely to then break above the surface fairly soon.
And one more question for you, Sam. I know everybody always likes to hear the stock picks and has questions. For MSCI, you said they're a good buy, a potential breakout as long as the dollar continues to weaken. Let's say we get some trade deals negotiated, all of these headlines sort of quiet down, the dollar starts to see some strength again. Do you still think that MSCI is a good buy, or would that negate some of that breakout potential?
Well, certainly if we see the dollar reverse, then a company that does have more than 50% of its revenues coming from overseas could see a slowing in the growth opportunities. But this is an index company that has 60% of its revenues from overseas. 75% of its indexes are overseas related. We've had the international group underperform the S&P in 8 of the last 10 years, and we're looking at double-digit relative PE discounts for the developed international index. And so the feeling is that investors are now looking to rotate into those areas that have been beaten up and underperformers for quite some time.
Absolutely, Sam. Seeing a lot more allocations put in internationally and in those beat-up stocks. Thank you so much for your advice this afternoon. Again, Sam Stovall from CFRA. Now, coming up, we'll take a deep dive into earnings from CrowdStrike. We've seen their shares under pressure today in reaction to the numbers. It was a mixed report for the cybersecurity firm, but it was the guidance that seemed to leave Wall Street wanting more. And be sure to stick around after the bell, as we will be joined by the CEO of C3AI, Thomas Siebel, to talk all things AI, its latest task order for the United States Air Force, and plenty more. Market on Close will be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Hey, Dad, I have a question for you.
Why does Grandpa not sleep with me no more?
Granddad had an account with Schwab before there were branches in the area. He really started.
This is the Word family. It's the Word family. Well. This is going to be my first red trade of the day. We've been hovering around the orb. We need to break out.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Yeah, I am.
Active trading webcasts
Full time.
are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an educator.
This room has been very helpful in me being profitable for the last 3 years. We just need a nice little breakout here, guys. I should have sold it and got my 150 out of it, 200. It's a hard resistance to break. If we break past 59.81.94.
Got a revenue story, you know, a used market was.
I'll never forget last January when I stumbled upon the
I won't forget it either. It's very bearish. I'm 3 notches out of the money. I don't want it to go below 1 more. This could get dangerous. It just did. When you're 3 out. CrowdStrike has a buy rating. Arias has a buy rating. CrowdStrike.
You know, right now they're having a tough quarter.
They're having a tough quarter, and I know still feeling a pinch, obviously, from last July's outage. For people not familiar with CrowdStrike, they had a Windows outage that halted flights and forced hospitals to push procedures. And then they offered that incentive program, which was mentioned quite a few times on their call, the customer commitment package. With those ending and causing that major hit to revenue, is that something that was a driver behind you maintaining the buy rating and keeping your price target as so, despite it being a tough quarter?
Exactly. You know, when you think about that incident, we're now almost a year beyond it. That the customer commitment program has ended. So, you know, again, we're at the trough here. The program has ended, and we should be moving toward a you know, more normal future. So yeah, I think a lot of the current issues are traced back to that incident. They had to make things right for the customers. You know, that was the slowing of revenue. That was the impact of margin that we've been seeing.
And one thing I think was not expected, at least, and it seems to be mentioned higher up in some coverage and lower in other coverages, that they disclosed in the filing that they had received requests from both the Justice Department and the SEC regarding some revenue and annualized revenue for some of their deals, for the outage, and some other related matters. Is any of that concerning to you?
It was a surprise. So yeah, I think there is a surprise there. Again, there's not the public information to talk about that too much.
And one last question for you. I just wanted to know, in terms of their guidance, I know we mentioned some of their guidance disappointing, but you did maintain that buy rating on them. The buy rating with the disappointing guidance, is that sort of a second half of the year backloaded? Do you feel like they'll get some forward momentum and we're just going to ride through another one? Or is there something specific in the guidance in this coming quarter that you have an eye on?
Yeah, I mean, one thing we didn't talk about is they had a major restructuring in May, and we took a restructuring, basically, layoffs, and also refocusing on their priorities on growth areas of the business. So that will be a major margin driver as we go into the end of the year and into 2027. So there is that.
Joseph, thank you so much. We appreciate your time today. Again, that's Joseph Bonner from Argus Research. Now, coming up, we've got Options Corner. Kevin Green will join us with the levels to watch heading into the close. We're back after a short break.
Let's go and have a breakout before the day's end. I've not got much time left. I don't know if it's going to happen. So much negativity. Might have to take a loss on this one. I don't want to. Let's break it. This is just hope right now.
Trading at Schwab is now powered by
Oh, I'll be glad, man.
Even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just
Let's go. Break it. If we break these moving averages, we have a chance.
When analyzing your stocks, our technical analysis
Let's do it.
podcast series breaks down different charting techniques like trend
Come on.
analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. It's time for Options Corner. Kevin Green is here to take us through some levels we should be watching heading into the close. Hey, Kevin, how are you?
Marley, yeah, I mean, we've seen some pretty compressed activity actually happening in the S&P 500. A little bit of a boring day here when you're kind of looking
Boring.
at the options flow, especially on an intraday basis. We've seen about a 20-point range for the market here today. We actually continue to see this range kind of being compressed going into the close here. So not sure if we're going to see a lot of fireworks, but if we're kind of looking at the upside resistance area that I'm focusing on, 59.90, there seems to be a significant amount of activity there on the call side, and then on the put side to the downside, looking at around 59.70. Now, if you kind of look at both of those levels, those have been pretty much the upper and lower bounds for today as well. But we are making technically lower highs as well as making higher lows. So hopefully we come to an apex here. We do see some form of action going into the close, but it doesn't seem like there's any aggressive buying or selling activity on the wings here for the SPX options that I'm seeing as of right now. So probably more compressed range, staying within those, between those levels going into close.
Yeah, pretty narrow trading range. As you look at the chart, because we've zoomed in so much, it looks like we've got some pretty solid movement, but only 20 points in there. As we take a step back, though, and we think about this longer term, what are you noticing?
Yeah, from a longer term standpoint, I mean, it makes sense that we have this area of resistance at around the 6,000 level. 59.70 is actually kind of that big area or line in the sand if you're looking at it from a technical standpoint. But we're basically trying to base out and then break out to the upside, try to attempt all-time highs here. And we have several key areas of support that we continue to kind of monitor here. The 20-day moving average, which is going to be in blue, the 200-day moving average, and as well as some trend lines that continue to hold up. And until we actually get a break of any of those particular levels, the bulls definitely obviously have the momentum in the market. Now, what you are seeing with the RSI, it is kind of breaking this little bearish divergence that did develop, but we are still seeing a lack of momentum when it comes to the price action.
Yeah, we are.
Again, coming up with a key area of resistance is not outside of the norm. We do have several levels to the downside that are still open gaps here. If you're kind of looking at the S&P 500, around that 5,800 level still has a potential gap to be filled, and then also down by that 57.35. It would be kind of unusual that we don't go back and try to at least retest those gaps before trying to move higher. And the farther and farther we get away from it, it's the less likely that we will come back. But at the end of the day, that's still at a level that maybe some shorts are looking to try to target if we do see a little bit of a fall off in action. Now, when you're kind of looking at the internals, the liquidity is definitely in the market. If you're looking at the book depth for the E&U S&P 500 futures, it looks really healthy, around 45 to 50 contracts in a bid and ask on average, which is actually really good. But the volume for the day is actually really light, and this is going to be one of the lighter volume days if we keep up at this particular pace that we'll have probably over the last 3 or even 4 weeks here, just based on the S&P 500 total composite volume. So that also kind of leads a little bit more validity to the fact that we are seeing compression in these markets. You don't really like to see that, and as a bull, you would want to continue to see us move higher with price. And at the end of the day, if we're stalling out and the bears are not able to knock us down, I still think that gives the bulls the edge for us to potentially reach all-time highs here in the next, hopefully, the next couple of weeks.
I know, we were speaking to Kevin Hanks earlier in the show, and he called today listless from the SIBO floor. And do you think we'll continue to see much of the same, as June generally tends to be a quieter month? Or do you think things like the jobs report coming out on Friday are going to have us see the volume increase back up?
Yeah, the jobs report on Friday should actually be a key catalyst for volume. And actually, if you look at the non-farm
Friday,
reports on a month-over-month basis,
we gotta wait that long?
Really good floors or support levels or resistance levels in the market. So that will be actually a very key driver. And I think the market is also kind of waiting for that number to come out, especially because of the ADP report that came in a little bit light here today. And you're also seeing kind of this reaction in the yield market that I think is very key. Obviously, we've been focusing on yields moving higher over the last couple of weeks because of debt issuance and potentially foreign buyers backing away. It just does not seem like the case that we are seeing a lot of that follow through, right? We are still seeing some buyers stepping in when we have risk on, a risk off data hitting the market. And today was one of those stagflationary type of scares that we got with PMIs as well as the ADP report. And if you actually look at the comparison between the S&P 500 and the 10-year 3-month Treasury yield spread, I actually like looking at this because there's a really strong correlation between the two. And anytime that they diverge, it's something that I always, it's a little bit of a radar item. For me, we are seeing a divergence today where the S&P 500 is moving higher. But over the last couple of days, that 10-year 3-month spread is actually moving a little bit lower, getting close to that zero line or going into that inversion level. We're about 1 basis point, 1.25 basis point away from that. So once again, on the surface, the price action looks good. Volume for the most part is a little bit light, but when you're looking kind of under the hood, if you get a confirmation of a lackluster job market on Friday, like a really bad print, that would probably be the biggest thing on the radar for the bears to try to step into this market and take some profits.
And I want to make a big pivot here, Kevin, as I look through your charts that you sent over. I see that you've been keeping...
Yeah, I thought we had this little thing going on there.
Colossal May up 170%.
You broke all them moving averages.
Right now they're up 7.5%.
The 9 crossed.
On the day. What are your takeaways?
My takeaway is you
This is
suck.
a stock that continues to get
I want
squeezed.
Caroline back.
This is an interesting one here. Every day we are seeing new strikes being added to pretty much all of the expirations. But if you look at the this week and the next 2 weeks, well, those are the active expirations that are being targeted. So the new strikes are coming out. You're seeing a large amount of buyers stepping in, and let's say the 200 strike level, which is actually the most actively traded one today that I've seen as far as aggressive buying activity. Once that occurs, you have dealers actually buying up the stock. It's still relatively a very low flow stock, very hard to borrow. So this is still a gamma squeeze in the making here. It's just remarkable that you can continue to see new strikes kind of hitting the market. Buyers continue to step in, and until that stops, this trend can continue. But when it does stop, Marley, as you have seen in the past and all of us have seen, the reaction to the downside could get fairly aggressive. It just doesn't seem like it's over yet. So this one's definitely on the radar. Interesting for intraday swings, but very, very risky, and you got to go into the trades knowing that you can lose all of your premium if you're going long calls or going long puts.
Well, we'll keep an eye on this one, Kevin. I'm sure it's not the last time that we'll take a look at CoreWeave together during Options Corner. Thanks so much for joining us. And still ahead, we'll dive into the housing market and we'll look at trends from the spring selling season. Mortgage rates, how builder confidence is at a 13-year low, and Market on Close. We'll be right back with that.
Can we get it? Do we still have hope? No. No hope.
Believe me.
There's just too much negativity.
You'll love Carl's Way. Take a left here, please. But there's a... Carl's Way is the best way.
Carl's Way is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services.
Yeah, I think this
Schwab
is it.
Network, available anytime, anywhere, on any
There's
device.
two big
for
ones
free.
today now. This one
Binge
yesterday.
watch the market with the Schwab Network.
Ouch.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks.
I'm Kevin
Catch me
Hickey.
on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Is it Hickey or Hick? Or whatever they call it. Hack.
Trading at Schwab is now powered by Ameritrade, giving you
Hank,
even more
I think. I forgot what they said now.
Connect with the Schwab.
Well, there goes the
traders,
knife for the end of the day.
passionate traders ready to
Practically
tackle
worthless.
questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Schwab?
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Market on Close. I'm Marley Caden. Let's focus on the state of the housing market and welcome in our next guest, Brad Hunter, the president of Hunter Housing Economics. Brad, thank you for joining us.
Riley, thanks for having me on.
Of course. Now, let's start with the spring selling season. It was a bit of a disappointment.
Well, I still got my $20 I found today.
Disappointing spring season for the builders. Spring is supposed to be the selling season for
YouTubers,
home builders.
I found $20 today in the parking
Things are
lot.
not exactly coming up roses this spring. More than a third of the builders cut prices in May, and it's up from 29% in April. Home sales, in terms of units, actually rose in May, but to an extent, builders are buying
$20.
5% price cuts, some free upgrades, a lot of incentives, mortgage rate buy downs, and so on. Builder confidence surveys are at a 13-year low.
What was that?
The HMI is down to 34. Anything under 50 indicates poor confidence among the builders.
Oh, you still looking at it?
I can't see it. I was asking Jesus because I think we're going.
Yep, it's over.
We just lost the sun.
Speaking of zone, I might be wanting to get me a cow zone.
I've asked, and he said we have. Yep, you're getting close.
See this? This is a 400-ounce bar of solid gold back in the 20s.
A lot of negativity today, Funk.
I mean, that's every day, but
I mean, more than usual today. Not for,
just take what the charts give me. I don't care any commentary from anybody. I never listen to it. I never read the news. I get what the freaking chart gives me.
yeah, well, I do too, but
An
that
okay
helps a
market,
lot when
and
they're
it's going to get
negative.
better. Developers and builders should start to plan on, not so many 55 and 65 foot wide lots as 40 foot lots as a way to kind of keep the affordability in place.
And you mentioned affordability. President Trump has recognized the shortage of affordable
I think
housing
it's
as a
they're doing it
significant
because
issue
we're
for many
we're
Americans.
approaching
He's
that
proposed two
high.
primary solutions, none
They
of
want
which
to
have
pull
been
back
acted
so they
on,
can get
but,
back in
I'm
it.
sure you're familiar with them. One, streamlining zoning approval processes to shorten construction timelines, and two, making some federal land available for new housing construction projects. Do you think
Had a
in
good
his
day
tenure
overall.
that we'll see either of those things come into fruition?
Well,
Couple
one of the things that
$1,000
builders
trades.
are always wrestling with is
Couple
the
$300 or
huge
$400
burden
trades.
of, regulations and impact fees
One
and things
bad
like that
trade.
on the cost of building their homes, and it's those things have a huge effect on their ability to build homes in the affordable
Counts
price
eight
increases.
trades
However, I
today.
would say, even if he is able to get some
Even the thunder's
reduced
outside.
regulations and red tape, what I'm worried about still is the tariffs, which from my channel checks could add between $5,000 and $15,000 to the cost of a home. And the surveys show that 78% of builders report being.
I just don't notice. Even listen to Schwab, they're not as negative as. That's why I quit listening to CNBC. I want Caroline back. Would you tell me that? Oh yeah. We've got 13 more minutes. I'll be right back. I said the PMI was good. Now they're wanting to wait for the jobs number. The 5980s.
Yeah, that's what I'm looking at.
Let's give it a shot or not. We had a double bottom here. We broke below my supports. The 200s.
Yes, has a level of 59, 83, 50 on the dot, and it's about twice off of the day.
Yeah. No, a little bit lower. On a 5 minute, it's 59.77. I don't know if I want to give it another shot or not.
Hold tight and see.
No, the 1 minute looks better to me.
There we go. I want one big push down.
Just did it.
I think it's successful. Smashing down to the 59.77 level that you kind of popped up earlier today. By then, RSI should be freaking screaming hot. I'll have to move it up to 59.75. And wait.
Okay, we're about there now. What time is it? No, I ain't gonna do it. Not no 9 minutes. If I was to do it, it'd be right now.
Ain't there for me yet.
We broke just right below my support. The 59.75s. Okay. Get ready. I tried to get it 125, 130. The 59.75s. Now we're at my support right now with the body on the 5 minute. There we go. $140. Boom. Sell it at market. $210.
Mm-hmm.
That'd help. I like trading with Tasty Trade. You can get in them trades sometimes real good. Hardly ever have any problem selling them. I'm addicted to them cheese chips. I'm done. I ain't gonna trade no more. It's too close. Yeah.
If I see an insane candle that pushes it into this zone,
yeah,
I'll probably grab one. If not, I'll stay out.
Is that the double bottom you're talking about?
I mean,
77?
59.75.25 is my ES zone.
Okay.
I'm not touching it unless it hits that with at least 2 or 3 minutes left.
Yeah. If I was hearing a little bit more positive on the TV, I'd probably do it one more time, but sour grapes. No. No, I ain't got time to mess around with this. Could be one of them 1 minute trades. If we get one more knife.
Don't do it now, you just let me influence you.
That's right.
Don't do it. Don't do it.
You know how that is.
I know what I'm looking for. If I don't see it, I'm not getting in it.
I don't know what I'm looking for too, but
Clock's about to run out because I ain't taking anything after 58:30.
yeah, the 1 minute would tell me not to trade it. The 5 minute would tell me to. And I'm not really familiar with the 5 minute yet. Good enough. Yeah, I mean, they're so cheap. Just right under the money is so cheap. $25, $30. Get 3 of them, 10 of them for $30. Now they're at 55.
59.70 went from 240 to 410. Half left. Shutting my platform down so I'm not tempted to do something stupid. Alright. I'll end the day green. I ain't never gonna complain about that. I hit my profit target. Good day.
You traded it?
No. No, I never saw what I wanted to see, so just got out.
Oh, very good.
Like I just shut the platform down so I wouldn't be tempted to push a stupid button.
Yeah. Well, we'll see you tomorrow.
Alright, buddy.
Cheers. My ding-a-ling's about to go off. And I'm going to look out. So there it goes. It went off. Well. There it goes. Look at it. It just now hit my number. 59.7766. And stopped after the bell. So, I like listening to the commentary sometimes, but today was very negative. It's like a month ago they were against Elon, now they're for Elon because Elon's against Trump. They don't want to hide that. They want to make it out there, the big nasty bill. Now, they loved the big nasty bills when Biden passed them. Huge spending bills. Oh, my waffle maker's still plugged in. Oh, they loved them. So here's another spending bill, but it's just not on their EV cars and their solar. So it's just easy to spot. And I want you to tell Caroline to come back. Now, I'm going to go ahead and take a break. I had to go down and clean another flood. Drain that goes into the from the air conditioners. leaks into this mop sink or whatever, and it was plugged up. And I wish I would have opened that door up today in there and looked. I need to open up that door every day, I guess. Just look in there. But it was all plugged up and seeping out into the floor, so I had to go down there. Once I got down there, I didn't know it until I got down there, and I said, oh shit, I gotta shampoo this little 10-foot square carpet while the air conditioners guy's working on the air conditioners. I feel like a property manager in a way, but I'm not getting paid for it. Somehow I feel like I'm saving them money, but these air conditioners have been here for 14, 15 years now. They just don't make stuff to last, especially in these commercial buildings. I was listening to a real estate girl this morning. She was, I didn't like her. She had an $80 million scheme back in the year of 2000 and something, early 2000s, where she was taking mortgages out on property, and then she would sell the mortgage, and it was like a pyramid scheme. And she got it to about $80 million. And she just laughing her ass off, you know. She got 7 years for it. Probably got out early. Good looking chick. Now, you know, back then you heard about the white collar crimes. Nobody really got prosecuted for them. But she scandaled $80 million. I don't remember quite how she did it, but she'd get a mortgage for $3 million, pay $1.5 million on it, sell it for another $1.5 million and pocket it. The house would be only worth $1.5 million, but she'd get a $3 million mortgage. And the banks, Washington Bank and a couple other banks were involved in this. So I'm going to go and take a break, get away from this. I got to, you know, that one good trade a day is all you really need. And if I did that, I'd be, you know, I couldn't sit around here all day and play around. I have to keep trading. But I've noticed here lately that at the end of the day, we have that sell-off, and then the other day we had to sell off, and it came back during the day. In the afternoon, I made a good ton of money on that one. Then today I had to leave, and I made $1,000. I didn't know if I should hold that trade or not, and I held it. I got down to the IRS building, and man, I was up $800. I said, yeah. Sold it. Then I come back and scalped it again, and then tried to scalp it at the end of the day, and it just didn't work. There's just too much negativity here. I think it's because a lot of fat cats missed the ride. That's what I'm feeling in a way. Because the same news is the same news. It's just... So they bring on all these people in here and talk negative about the market. So, adios. Let's have a good day tomorrow. More tornadoes coming. See you later, Robert, on YouTube.